You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 22nd day of August, 2019. Thanks so much for joining us, whoever you are, wherever you are. We're just glad to have you right here, right now. Breaking news, a little disturbing. I don't have all the details, but I just had a headline cross my desk. Overstock CEO Patrick Byrne, a longtime friend of this radio program and the CFRN family, all the way back to 2006, has resigned. All my headline says, Overstock CEO Patrick Byrne resigns following deep state comments. If you don't know Patrick, he is the smartest guy in most rooms. In fact, I think if you put Patrick, Elon Musk, and Mark Zuckerberg in the same room, it'd be a race to the finish. And I think Patrick, well, he's a friend, so you get the point. Hey, let me put up a trade, or put up a chart filled with trades. Let me just put up a chart. S&P 500, Emini Futures. This is a daily chart. Okay. Now, where are we? Right here. Now let's bring some clarity to this whole thing. And I'll go here, here. And if you're on the trial, you can do exactly what I'm doing right here, right now. Apply the CFRN indicators. We had a bearish cross August 5th. So we had a leg from the all-time historic high that was put in on July 29th. That began a leg that took us all the way down to a swing low August 6th at 28, no. We closed at 28.75.50 on that day. The swing low was 75.75. Okay? So when the market finds support, in a falling market finds support, the next high probability logical move is a retracement to the BBC. That's the green line. BBC just stands for bull bear cross. When price crosses below, we're bearish for whatever time frame we're observing. And when price crosses above, we're bullish. We expect higher prices. And then when price crosses back below, well, we anticipate lower prices. Price always reverts to the mean, and in our case, the mean is the BBC. So after the down leg, finds support, retrace to the BBC. Next high probability move, continuation of that leg to the downside. We found support at a higher price than we did the previous swing low. Support, higher support, even higher support, which sends us, see how this thing just repeats itself? There's no new tricks in the bag. I mean, go way back over here. There's your leg. There's your retracement to the BBC. All right. If the next high probability logical move is a continuation of the leg of the downside, which it was, you find support, it sends you back to the BBC again. Is the next high probability logical move a continuation to the downside? It is. We've been struggling at this very critical point for 1, 2, 3. This is now the 4th session. You'll notice that on this move down, right, we didn't quite make it to the CFMA1, which as of this candle was blue and climbing, and that represents support below the BBC. Now see how it curled up, okay, even more bullish, okay, but yet we've not been able to break away from the BBC. What needs to happen for the narrative on the daily chart to change from bearish to bullish, we need to have an open and a close above the BBC. Now you see here we closed above the BBC on this candle. This candle opened today above the BBC. We've traded down to touch it, right? So this is an intraday move. If we close above, the only issue is we're still touching on this daily candle, we're still touching the BBC. So as long as we're still touching, it's holding, okay? Now, when price pulls back to the BBC, it holds more often than it doesn't, okay? It held there, it held there, didn't hold there, didn't quite make it all the way back. The market was so bullish, there was such buoyancy, such a buoyant sentiment. Sent it on up, pull back to the BBC, it held, new all-time historic high, leg, pull back, held, leg, pull back, still holding. So how today closes would be very important. Now remember, I just explained what has to happen for the narrative to switch to bullish. The sentiment is already bearish. If we close lower than we opened today, I'm still very much of the opinion that we'll see lower prices throughout the rest of the week. I mentioned this, I believe, Sunday night in the Telegram discussion group, that although the market started off, or the week started off on a bullish foot, by midweek, I expect to see lower prices, possibly significantly lower prices. We got Jackson Hole going on today. This is the big Fed summit where they're all coming to talk about the things Feds talk about. There was a statement this morning from one of the Fed chairmen, one of the Fed presidents, and then tomorrow Jerome Powell is going to address the public. Okay, they're not going to take us behind closed doors, but he will have some comments. Either way, that should bring some continued volatility to the markets. Now, I mentioned some time ago that these are the best of times to be a trader. Not only have we had great volatility, two-sided action, up days, down days. See, as a futures trader, we really don't, it's not important if we're moving up or moving down. It's just important that we're moving. When there's movement, when the river's flowing, you can go down most any day with your little tin cup, scoop up a couple points in the S&P, or maybe 10 ticks in crude or gold, and reach that goal for the day of $100 per contract. It doesn't sound like a lot, okay? God says, despise not humble beginnings. Not only do we have a humble beginning, but something else that you might have noticed about us is we try to maintain humility throughout all of it. On the best of days, when some might say, you really knocked it out of the park. We appreciate a kind comment, of course, who doesn't? But we don't want to buy into that, okay? We want to stay neutral, middle of the road, boring, if you will. If you're looking for excitement in your life, there's so many ways to find excitement. Trading is not the place where you should go to get your jollies or get your yayas. No. Here, boredom, boring is good. All right. So we'll watch this. We'll monitor it throughout the show. This is a daily candle, so we don't expect a whole lot to happen. But we'll keep an eye on it. I have a little bit of news for you. I already gave you a little bit. But I think this is worth noting as well. As soon as I find it. And I will. All right. Bitcoin, if you've been watching it, according to the experts, Bitcoin prices have far higher to go during the current market cycle if crowd sentiment takes charge. That's from the analysts, or the analysis of the Bitcoin Days Destroyed. That's BDD. It's a thing. It really is. It's a technical indicator that measures sentiment. In social media posts on August 22nd, Hans Haag, senior qualitative researcher at crypto investment fund Ikigai, I'll only say that once, identified Bitcoin sentiment as being similar to what we saw in early 2017. That was just months before the cryptocurrency reached its all-time high of $20,000 per coin. In a tweet accompanied by a corresponding chart, Haag wrote, Bitcoin bubble tops are clearly identified with a dark red cluster of adjusted binary BDD. He went on to say, until that happens, we're not at the top. Public opinion is key here because that red cluster is caused by the assumption of the crowd and is a self-fulfilling prophecy. So what is this BDD? It refers to the amount of time between movements of an amount of Bitcoin. Higher prices tend to coincide with coins moving more often, and at present, Haag says the opposite trend is apparent. Coupled with this, the Bitcoin Fear and Greed Index, which also measures market sentiment, remains near the bottom of its possible range. That's the exact thing you should be looking for if you're buying the dip for the long term, according to Hague. The Bitcoin USD has languished in an uninspiring sideways pattern for much of this month, leading to warnings that a downturn is on the way. Next in line could be a trip to $7,000, according to another trader who argues that such a pullback remains historically plausible and would not suggest a bear market. Zooming out, other market analysts predict just the opposite. Fresh gains to be characterized by next year's block side reward halving, which is due in May. Plan B, the Twitter account that champions the stock-to-flow method of predicting Bitcoin price, also suggested current price behavior mimics that of early 2017. Bitcoin's 3-month struggle to break the magical $10,000, feels like 2017 struggling to break 1,000. Can you imagine? In 2017, we were struggling to break 1,000 and hold it on a pullback. Here we are, August 2019, struggling to break 10 again. And remember, I went on and on about this for a while, that I think we're going to jockey back and forth, above and below, that $10,000 huge psychological number. But one of those pullbacks to 10K is going to hold, and the next time you see $10,000 will be in your rearview mirror. I don't think you'll see it through the windshield again. Has that happened yet? I don't think so. I was leaning in that direction yesterday, but I'm going back to the middle of the road on this, and I'm just going to watch it unfold. Okay, I got more news, but I know Michael needs to come in and do the recap of what happened in the live training room this morning, so we'll get to that when I come back. Let me just give you the numbers right now from around the world. These are the cash markets. We'll start in the U.S. Currently, the Dow is up 56 points. NASDAQ is down 39. S&P 500 is down 3.5. And the Russell 2000 is down 4. In the commodity basket, crude oil down 43 cents. Gold down $5.89, trading 1509.80 last. In the Asian markets at the close, Nikkei posted a gain of 9.5 points. Shanghai posted a gain of 3. And the Hang Seng finished the session down 221, and that's almost 1%. In the European markets at the close, FTSE posted a loss of 75 points, a little over 1%. The DAX dropped 55, and the CAC at the close was down 47, which is a drop of almost 1%. Now that gives us a mixed day in Asia, a red day in the UK, and it is a mixed day here in the US of A. The Dow is the only thing showing positive at the moment. Let me refresh, bring in some fresh data. Actually, the Dow gaining traction to the upside. So the question becomes, is the Dow leading the markets higher, or is the Dow lagging the other indices on the way down? Just a quick peek. That's the S&P. These are this week's zones, and I'm going to go into great detail when I come back. But we went from zone up to the zone where we expect consolidation. And then we went up to the next zone where we expect consolidation. Back down to the zone, consolidation. Failed just by a couple points here to make it back to the zone. Back down to the zone, back up to the zone, back down to the zone, and all the way down to this zone. Up here, from 27 to 37, we're talking about 10 points up, 10 points down. About 7 points up and 7 down, 10 up and 10 down. And then the distance between 29.05 and 29.26. That's a 21-point move down. And we're working on a 21-point move back up. Last night in the Telegram discussion group, I gave the guys and ladies a number, and I said if we trade below this number, our narrative for the session will go from sideways to bullish to sideways to lower. We have crossed that line in the sand, and I'll talk more about that as well when I come back. We'll also talk to John. Today is Dr. Tom Day. He'll be joining us at the top of the hour. So let me get out of here so Michael can get in here and give us a recap of everything that happened. All that and answers to your questions when I come back. Michael, take it away.
Okay, I got it. All right.
That's a proprietary. Our indicators, Donnie, are proprietary in nature. Michael may want to go into some more detail with you on your question there.
Yeah.
I'm going to bug out and
Okay.
put it on mute. It's all yours. I'll be here when you're done.
Okay, sounds good. Here we go. All right, good afternoon, everyone. Today is Thursday, the 22nd day of August, 2019. If you have not taken a free trial with us, go to the home page here at CFRN.net. And in the right-hand column, it says 5-day free trial. Apply.cfrn.net. If you click on that, you'll be brought to this page. Oops, this page. You can go directly to this page as well. It's eminitrainingschool.com. And all you have to do is give us your name, your email, and your phone number. You can tell us your biggest trading challenge so we can try to tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on the confirmation link because we don't know that you took the free trial until you click that confirmation link. Okay? Now, results. Okay. If you're going to read the spreadsheet, you could read all the CFTC risk disclosures down at the bottom. Today is the 22nd day of August, 2019. Today, we made 4 ticks in the euro, 15 ticks in crude, 7 ticks in gold. That put us at $245 per contract this morning. Today, it took 18 minutes and 3 trades to get to the goal for the day. At that point, we're up $120 a contract, and we took a total of 10 trades. So on the month now, we're at $5,331. That's over 16 days, averaging $333 per day. On the year, we're at $22,882. That's over 150 days, averaging $152 per day. Now that is 1 contract, 2 hours per day, while I'm answering emails and text messages and chat box messages and all that. So you should do better than that. Okay? Okay. Now, there was a lot of movement today. A lot of movement. We had, what I say, 10 trades? But I missed probably 10 more. And we'll start out here with gold. Now, our first trade here on gold, we picked up 2 ticks. Okay, second trade was a break even. We missed a momentum trade there. Here we picked up 5 more ticks to put us at +7. Then we're getting into the break here, and I'm just trying to see if we had anything during the break. Yeah, we had a short right here. Good for about 5 ticks. Didn't put in a lower swing though. Okay, so we ended with +7 on gold. The euro we actually traded today. Right here was a shorting opportunity that we missed. And then there was another one right here. We actually got that one, we got a break even on it. And then finally over here there was another one, and we picked up 4 ticks on that one. Okay. Now, what you anticipate when you get into one of these, this right here was the highest probability trade setup. Why? Well, because the MA1 was blue, the cycle was blue, and the green line had pulled all the way away from the MA1. We got a we got a bounce off the BBC, and up it went. Okay, now we got out with 4 ticks profit, trailing our stop, but that was the highest probability trade setup. Okay, I think there was another one right over here. I was just looking to see if, yeah, no, I didn't do anything with that. Okay, and then it just went flat. All right, now crude oil. Yesterday, when crude was up over 57, I said look for it to get down to 56.13. And boy, did it. Let's go back here. Okay, right here on crude, we picked up 10 ticks right here. This is where we got the goal for the day. On that short right there, we picked up 10 ticks there, then another 3 right there. Then we missed that one, and that one, and that one, all which would have been profitable trades. And then we had to wait a while, and we had a break even on this one, and we picked up 2 ticks on this one to put us at plus 15 on the morning. Then we're getting into the break here, but during the break there was a shorting opportunity right here for that huge leg down. Then it changed directions, and yeah, it had a long from right here for this leg up, and another one there, and another one there, and that was it on crude.
Hey,
There
John,
was
just
a ton of opportunity
remind
today
you
on
that
crude.
today's Dr. Tom Day.
That's why crude is my favorite market.
Michael, yeah, Michael should be done with his part in about 5 minutes, so anytime after that would be fine. Did Tim get a hold of you?
Okay,
Tim?
so here we had a break even.
No, John, I didn't.
This is on the ES. We had a break even right there, and then
Okay.
just looking to see if we missed anything while it was going up. I think it was going into the high of the day here
Sure. No.
at the time. It turned around, started coming down.
Well, when I shared with him the
And we
information
had a
about
break
that
even there.
mining.com,
Then look at that huge move
he's still
down.
very interested, and so I don't know what it's
What
going
the
to.
heck happened there?
I don't know this guy that well.
Now,
I
using
mean,
our regular
he's been-
trade setups that we use in the room in the morning, we didn't have anything right here, but using the Tuesday trades, the 164s, we had a short from right there, another short from right here. Okay,
Yeah, okay, so this
And if you
news,
don't know
I'm
what the
pulling it
Tuesday
up.
trades are,
We're down a
go to
penny.
CFRN.net.
Okay.
/.
Oh, I see. So they took
Emini
that article
Tuesday,
and turned it into
and you
a
can watch
press
videos
release.
about them
Okay,
there.
gotcha.
Okay, then we had
Well,
this big move
doggone
up,
it.
but it
All
didn't
right.
give us a trade setup.
Well, all we can do is I'll just keep banging the
Doing
drum,
what we
man.
normally do in the room.
Hey, let me ask a question. John,
And then it got all
John.
choppy. And now we get into the break here. And during the break, it looks like there was a shorting opportunity right here that would have been a break even. Change directions and nothing. Okay.
I forgot to ask you. I meant to ask you, but you hung up. Do you know any smart people?
Back to the
who
spreadsheet.
are
If you're going to read the
investing in
spreadsheet,
stocks
you got to read all the
that don't have
CFTC
any
risk
kind of
disclosures down at the bottom.
business?
Okay. Today we made 4 ticks in the euro, 15 ticks in crude, 7 ticks in gold. Put us at plus $245 a contract this morning. Today it took 18 minutes and 3 trades to get to the goal for the day. At that point we're up $120 a contract, and we took a total of 10 trades. So on the month now we're at $5,331. That's over 16 days, averaging $333 per day. On the year we're at $22,882. That's over 150 days, averaging $152 per day. Okay. Now, if you have not taken the free trial, go to the home page at CFRN.net. And in the right-hand column, it says 5-day free trial. Apply.CFRN.net. You click on that, and you'll be brought to this page, EminiTrainingschool.com. You can just go directly to that page if you want to. And all we ask for is your name, your email, and your phone number. And you can tell us your biggest trading challenge if you want, so we can tailor one-on-one training just for you. And you hit the send button, and you'll be sent a confirmation link. you must click on the confirmation link. Okay, we don't need to the trial until you click the
Do me
confirmation
a
link.
favor and refresh that page if you would, please.
Okay.
I don't think you'll find this anywhere else on the internet, folks. Scroll up a tad.
This one?
Do a
Click here to
hard.
be connected to
No,
a
no,
human.
no. Yeah, do a hard refresh on that page. Control R. It's displaying differently.
Hang on.
Online.
Why don't I just close it
Yeah. Yeah, you can
and
do
open
that.
it again?
Uh-huh.
There we go. But it can be simple.
We make it simple.
Yes. Okay.
Okay, let me check. Let me see why my page is not loading. Oh, you know what? Go /results. I didn't change the home page. I just changed that page. So just throw in a /results.
Okay. Slash.
Mystery solved.
There it is.
So now scroll down. And you got a bunch of charts that you can
There you go.
you can whiz past those guys. So, you know,
Okay.
keep going. And then you can pass up the article here. But I recommend everybody read this article. Anyone who's followed us for any length of time knows that I left my heart in Ecuador. I'm going back to get it someday. Maybe you'll join me. Okay, keep going.
Okay.
Keep going. This is something you won't find anywhere else on the internet. I'm pretty sure. Keep going. Here we go. What does that say?
Talk to a trader.
That's right. Click here to be connected to a trader. Now, come on, seriously, who else, folks, in the audience, do you know any place you can go where you can click and talk to a trader? I don't think so. Well, maybe your neighbor, and you're both in the learning process, and so you probably do talk to each other, and that's a good thing. But somebody that can answer your questions, and when I say answer questions, I don't refer just to our methodology and our indicators and our blueprint. I think I'm qualified to answer most any question about trading in general. And the stuff I don't know, I'll just tell you right off the bat. You got the wrong guy. If you want to talk options, you should call Bert or Michael, right? And there's other things that I'm not that familiar with, but I won't just make stuff up. I'll either say, oh yeah, I can talk to you about that. You want to talk about fibs? I mean, number of things outside of our methodology that Michael and I both, just from, time and service. We've been hanging around this industry for a while, so we've picked up a thing or two, and we'll share it with you. And when we share stuff with you, we don't expect you to just believe us. We're just some jokers on the internet. What we want you to do is to take what we do share with you, based on our own experiences, not something we read in a book. Take what we tell you, and then go out there in the real world and put it to the test. Drag it out in the light of day. If it doesn't stand up and salute, well, then you should drag it back in, call us back and go, hey, you said blah, blah. Well, I've been watching and I don't get blah, blah. Oh, okay. So either you misunderstood something I told you or I was wrong. That can happen. So then you'll send me back out researching my own research to make sure that what I shared with you is valid, because it's not just because we're getting older and it's more difficult to remember things, but when you tell the truth, you don't have to work so hard to remember what you said. Facts change, but truth never does. So as older guys who maybe don't remember quite as well as I used to anyway, I'll speak for myself, I just stick to the truth. I can usually remember that. So anyway, I'm sorry I interrupted your show. Back to you.
That's okay. I was just about to pass it back to you.
Okay.
Yeah, and so I was about to say, and with that, we can pass it back out to fabulous Phoenix, Arizona, Studio A overlooking South Mountain, America's largest city park, where Dwayne is currently residing. And Dwayne, you can take it back. Donnie.
What was that? Saying? Go ahead. Yeah, go ahead.
I got to answer Donnie's question.
Yeah,
I didn't
sure.
really answer it. It's more than just a moving average, Donnie. All the indicators that we have are proprietary, and none of them are as simple as they look. Like, Like if you threw a moving
There's
average
a
on
little,
here.
little mathematical heavy lifting going on under the hood. But what's
Yeah.
unique about them is the way that we have trained them to work together,
Yes.
supporting each other. Okay, you got your job, but then there's like a project manager in the middle directing the traffic flow. So back to you.
That would be the BBC right here. And then down here, the project manager is the cycle.
The good news, Donnie, is if you're on the trial, you can just simply download, put them on your chart, and test them out, you know? And really, here's the thing, Donnie, and because I don't want people to lean too heavily on indicator mentality. I mean, obviously they're important. We use them. But our indicators are designed to do one thing and one thing alone. No matter what market or time frame you unleash them on, okay? Their job is to go in, find the underlying rhythm of that market in that time frame, and then tell the other indicators to highlight it up real pretty so that you can find the highest probability, lowest risk entry that we understand. So I should have wrote that down. That sounded pretty good. It's true. Oh, the recorder's on. Okay. If you want to hear that again, just tune in later this afternoon at youtube.com/CFRN. Hey, so recap of the recap.
Today it took 18 minutes and 3 trades to get to $120 per contract.
You've been on a bit of a roll for the last 6 years.
Yeah, we have. Yeah.
And so, guys, that's just not numbers on a page or, you know, some historical stuff. The whole world has the ability to log in, watch us do what we do, live in real time. There's none of this behind closed door, shadowy, you know, clandestine, cloak and dagger garbage. Logic 247. I mean, if you're on the trial, you already know that it's just right there. You know, you get an alert at 2 a.m. in the morning, as an example, or 3 a.m. at the London Open, and then it triggers an hour and 45 minutes later. I mean, you're watching it happen live in real time. There, you know, all of the shenanigans that go on with photoshopping charts and using Camtasia to trade in sim, right, and record it and make it look like you're trading live. You know, the breathless anticipation is you don't know if you're going to get filled or not. Oh, come on. You know, some of them are pretty convincing, but just, you know, don't let people insult you like that. If they won't treat you with dignity, respect, and honesty, you don't have to come to us, but go find somebody that will treat you the way you want to be treated. You know, you don't have to you do not have to put up with that garbage anymore. Used to be, if you hope to learn any little nugget or kernel of wisdom about markets, you had to go hang out in some place where people were using profanity, smoking cigarettes, probably, I don't know, talking, you know, trash about women and people of color, you know, and every now and then throwing out, you know, some trade that you would latch onto with both arms and just pray to God that it was right. And well, you know the story. You were there. It's not good out there. But used to, there was no alternative. Now there is. There has been since 2005. There's been an alternative. And I got to tell you what, that alternative ticks some people off. Hey, you know what I'm talking about. And we're coming to get you. So that's all right. Next, what do we want to do? I need to take back the charts, right?
Yeah, you got to take back the charts. Yep. That's the next step.
All right.
And then, let me see if John's out there yet.
I feel as if I've done this before.
It is 12:40.
Yeah, you know, I just
John
spoke
is
to
out
him, and I told him it was Dr. Tom Day, so he is here. That's great.
Yep, I just opened his mic.
Okay, thanks. Now, guys, when I come back, we're going to do, after we talk to John and Dr. Tom, stick around. We're going to recap all of the Concierge Trade Alerts from last night. We're going to go over the Logic 247. Oh, and newsflash. For a year, we've averaged 20% of our alerts getting stopped out. This week, a rare thing has happened. we're at 22%. So I got a day and a half to fix this puppy. Watch me. All right, John, welcome to the show.
Hi there.
Good to have you with us.
Thank you. Thanks for the invite. We talked in the last few days that we were at a very critical point and the market could turn down.
Indeed.
And unfortunately, that looks to be happening right now.
We've struggled. You see that,
Also-
John, here on the daily, 4 days in a row? We're right at that same, and you're right, it's very critical. If we
Yeah.
pass this test, we go up to challenge the all-time historic high, I think. If we don't
Yeah.
pass this test, we're going to go down and check out that previous swing low and maybe even the one before it.
Yeah, it actually looks like the fact that we spent so much time trying to, you see, I mean, with the last bottom we made on May the 28th, you see how we went up right away? We didn't spend very much time there, but this is spending,
May 28th.
or sort of June 3,
Yeah. I got you. Right here. Yeah, right here.
Yeah. So, and that was a 3-wave pullback. This one, even though we made, this is a what I think is a B wave, right?
Mm-hmm.
The new high, July the 17th or July the last week of July, and here we could be in a C wave again, which means that there's a possible very fast test coming down to that 2760, possibly even a bit more, down to about 2720. Then from there we could go up. The next leg up could happen. And unfortunately, this morning, the couple of Fed guys, some guy said, he was a bit hawkish, and he said, we don't need any stimulus or cutting, so that.
And is that what this sent the market? I was away from the office for a little bit. Is that what sent the markets lower?
Almost, yeah. It was about 10:46, and right from there, the market suddenly tanked. And also that Germany, just because Germany came in a bit higher, they said they didn't want to stimulate over in Germany. And this is what happens, it's sort of like the beginning of 2007, when the Fed, if you remember when Kramer said that, that big rant that he had, they know nothing,
Mm-hmm.
and they acted too slow. That's a danger. They need to get. I mean, Trump is right. And speaking of Trump, what's amazing about this guy is he's really brought the government out into the forefront. And just like what you were saying, there's no stuff, there's some stuff behind closed doors, but a lot of it is out in the open these days.
It is so much more than before. I mean, the access we have it's unprecedented.
It's amazing, and I think it's riveting because people are aware of what's going on around the world, and he's right on top of it all the time. Listen, I think look, he may have overreacted a bit as far as the Denmark thing is concerned, but as I said the other day, the smartest thing in the world would be to buy Denmark and get Greenland thrown in, because they're both pretty good buys. But that would be an interesting. I mean, it's probably not going to happen, but if it's an interesting,
right.
It's an interesting idea, and stranger things have happened. I mean, look, France, which is in trouble economically, or is in a lot more trouble than the UK. And there was a time when the UK was struggling to keep up with Germany and France. Now it's kind of the other way around. Not so much with Germany, but definitely France. I mean, the UK is one of the better performing economies in the EU these days. When you look at the unemployment, I mean, I think Germany's unemployment is still fairly high. France's is very high. It's still up around 10%, and then Spain is 14%, and the UK is like 4%, 3 or 4%. It's really low. We talked about this before. It's the same as what it was back in the early 70s, before the crash, and lowest, and it's actually technically it's lower today than ever before, because if you take the size of the economy and the increase in population, there's actually percentage-wise less people looking for work than ever before in the UK, just the same as here in the US. So, but a couple of bad things have happened today. The comments I've already mentioned to you,
Mm-hmm.
and the second thing is, and just going back to Trump, look, he's been hammering. He was pretty hard on the Fed yesterday. I mean, he was a little bit over the top, but he's been 100% right. And the Fed, I mean, look, what he hasn't said is what you've heard on this show, which is, the fact that the Fed, maybe without even realizing it, have raised rates tenfold, ninefold, tenfold. And that really has definitely, put a brake.
It's just
on
too much,
growth.
too fast.
Yeah, put a brake on growth in the U.S. and the fallout is going on all over the place. So, yeah, and Trump is right on top of that and recognizes that. And they need to be pretty decisive. I think if they do another quarter point this next meeting, it's probably going to be a negative. It's probably going to be not enough, and the market might complain. The gold and silver, the gold stocks are pulling back a little bit today. I can tell you given the way they've pulled back the J Nug and the Nugget, if the Nugget gets back over, I'd probably put a buy stop now above 36 and a half, just to make sure you catch the next upward move. Listen, the J Nug could come all the way back could possibly break 70, come down to about 67, 60, somewhere like that. That'd probably be a great place to buy it. So the same with the Nugget, gets down in the low 30s. But the problem with today in the market is the PMI came out and it's just bordering on the 50. In other words, it's almost at a contraction. If it goes below 50, it's the lowest readings in 10 years. So it's a problem. And it's pretty, look, the PMI, the market, as the PMI goes, so goes the market. And so this is a real millstone around the market's neck now, because the fund managers and all that, I mean, they just have basic disciplines that were just like, I mean, fortunately today the unemployment claims were down actually rather than up, so that's a little bit of a plus. But this PMI is a problem, and the fact that it's dropped, probably 20% from the highs or more from recent highs is potentially a problem for the market. The market is not really reflecting it yet, but if we suddenly, what could happen from here is that if we break down the market, if we do break down much more, it's going to feed on itself, and we're probably going to go down a couple hundred points in the S&P, and obviously that's going to be pretty painful.
What do we have in the way of news tomorrow morning, John? I'm taking a look. I don't know.
Unless they pull something out of that with the Jackson Hole meeting in the next couple of days.
Okay, tomorrow morning at 10 a.m., Fed Chair Powell will speak to the public.
Yeah.
And then also at 10 a.m. we've got new home sales. That's listed as high impact. And actually the Jackson Hole Symposium, they only call that moderate. They don't call that a high impact. But we know what gets leaked out and what gets talked about and what they spin it into on TV. That's going to dictate what the market does.
Well, we're a little bit less than a month away from the next meeting. And, a lot of things could happen in that time. Yeah, so,
yeah. But it appears, I just brought an article up. Let me see if I can get that back. Well, anyway, I don't have the article at my fingertips, but that's like some percentage of the Fed presidents. How many are there? 5?
You mean the guys that sit around the table?
Yeah. How many of them is there?
Probably about 8, I think.
8? Okay. Because some number of them, 3 or 4.
There's a few unfilled seats at the moment, but
okay. Because I think 3 of them are completely against a program where we do a staggered amount of rate decreases. The very thing that the economy is hoping for and that we're talking about. 3 on the panel are saying, no. Now, when they take a vote, do you know this? Does the vote stand, or does Powell
the minutes came out yesterday.
override them?
There were two looking for a bigger cut. There were two that they were looking for a big.
Okay,
for the
so
50
that
50
that
basis
leaves
point.
the rest of them not in favor of that.
Yeah.
Okay.
Yeah.
All right. Well,
But they may have changed their mind now. Because especially with Trump leaning on them, you never know. They might.
well, does Powell have the final say, or is it an actual vote? A majority rules.
No, I think Powell has the final say.
Okay. All right. Okay.
So there's some pretty interesting articles that came out today about gold, and the dynamic.
I happen to have one right here. Funny you should mention that.
Oh, that one? Okay.
Yeah, this one. That's not the one you. I thought. When I was.
There was one that was pushing gold up towards 2,000 or even 2,500.
We'll look at that one in a minute, but this one's near and dear to my heart. A barometer of progress to date, already producing and readying gold and silver ore shipment, or for shipment to smelters. Santa Fe. Now, you heard it first here on the radio program that they did make this prestigious list, which we've already looked at that, but I'm going to put the link to that. I'm going to put it in the chat box for all of you guys, in case anyone has an interest. Now, this is not a solicitation to buy or sell any security, okay? You know that I have a vested interest in this, and I'm going to, give me 1 second. I will put the link in the chat box here before the show's over, where you can go and see exactly where I stand, what I hold, how I come to hold it, how much money I've spent. You'll read about the fact that this very company made me a millionaire. A millionaire, I'm telling you. Even took the wife to dinner. I had celebratory shoes that I wore for that night. They'd been in my closet for years. And when the day came, man, I put the shoes on. We went to the dinner. And I had quite a band of followers. And at $2, they decided to take their justly deserved profits. They had bought, they had held, and yeah, you should get paid. But not me. I'm a company man. I was convinced we were going to $5 on that run before it was over. I didn't sell a share. I did not. I still have those shares, and I have more shares. And so you should read the disclaimer, the disclosure on the website. But just know this, when we hit $2 this time, I'm going to take profit, all right? I won't sell it all, but I promise you at $2, I'm going to take enough profit to get some of my current situations out of my life that are making me absolutely crazy. And for once in a very, very long time, I'm going to get a good night's sleep, several in a row. All right, let's go to the article. I haven't read it yet, folks, so I'm here with you. Santa Fe began mining operations at its Jim Crow gold silver mine in the historic Steeple Rock Mining District of southwestern New Mexico in May, currently producing and readying ore for shipment. Now, I won't go through the whole thing. I trust that those of you who have an interest, you can go to finance.yahoo.com and then just punch in Santa Fe, and it will bring this up for you. Isn't there something in here about, let's see, at strategic, this is from, who's writing this? Over the past, the company has thus far managed to secure a portfolio of 148 mining claims covering some 42 potential mines and mine sites, now intent on developing each mine at an attainable pace as it brings multiple mines into production one after another. Fortuitously, recent strong upsurges in precious metal prices and robust markets continue to increasingly benefit our business and value model. Who is this? The CEO, the president? Who's writing this?
This is the chairman.
This is the chairman, okay. Also, during this past 3 year of accumulation and more recently production, at strategic levels of achievement, I have periodically increased my own personal investment in Santa Fe Gold with increasing confidence at each milestone and improvement in the company's prospects. Now, this is the chairman. Earlier this year, I added 400,000 more to the company at 8 cents a share for 5 million shares. And last week, as the company began to raise significant amounts of ore to the surface, I elected to further increase my investment by an additional $600,000 at 8 cents, both times by private placement. This brings my total investment in Santa Fe Gold for the first 8 months of 2019 to $1 million. And and my overall investment in the company to more than $2.1 million. Now, I'm going to tell you something. There's no better endorsement for a company than when you have a chairman, a CEO, a beneficial owner, anyone who reaches into their own pocket for that kind of money to increase their stake in the company. One of these recent IPOs, I forget which one it was. I don't think it's Beyond Meat, but when the lockup period ended, the folks at the top couldn't scramble fast enough to get out of that thing. I'll look that up for you guys.
Saw the price going up that much.
Yeah.
By the way, that comment underneath that he says he finds the comments concerning. The chairman didn't know when he decided to put in another 600. He didn't know what the grades were at that time. So that comment is null and void. So you can.
Yeah, I'll get rid of that. I didn't see that stupid thing.
But that's a fact. I can tell you.
I'm going to tell you. Let me just share something with you guys.
And it wouldn't have changed. Look. He reached his own decision. Nobody asked him to do it. He just came out of the blue and decided to do it. And I would emphasize. Look, this guy is the company is very fortunate to have a chairman of this caliber running the company because he's an incredibly accomplished guy. He's one of the best traders I've ever come across in my life. He built up his own fortune from trading, and as you know, that's very difficult to do. And he's probably done it at a rate equal to, he didn't do it, continuously, but in the years that he did it, he was certainly, giving people like Warren Buffett a run for his money in terms of his annual returns, and he probably outperformed the entire world. Because in the early 90s there was a company called NVR. If you can put NVR up on the screen.
Yeah.
It's a real estate company, and if you remember, you had this was the time when Trump got into trouble with real estate.
Okay, tell me again now, John Symbol.
NVR, Nancy Victor Romeo.
The question from the audience I was just answering, but was he trading ahead of an announcement? Which, of course, the elephant in the room's insider trading. And my answer was, you could call the company and get clarification, but I'm sure he wouldn't do anything illegal and then announce it in a press release. So
no, for sure. Look, he just decided to do it when he did it, and the price is the same. Nobody's got. Look, if you want to buy the stock today, you can get it for the same price.
Exactly. There you go. That right there. That's the story in a nutshell. You can buy it at the same price that he paid today. And I've said this before. I'll say it again. If I had an extra $100,000 laying around, I would take 1 million shares today. Now, that's not a pump, because I got nothing to dump right now, not till we get to $2, and I'm not going to dump it. I will ease out of it. And as I told you on the forum, in the discussion group, I'll notify you of what I'm doing. So none of that, no shenanigans here.
Look, first of all, we've got, the wind at our back in terms of mining stocks, because
yes,
when the price of gold going up a few $100 makes a world of difference to almost any mining company. And secondly, a company that is coming out, just getting production going. Look, it don't have to be this company, but you go and look at any company that started production. It's highly likely. Most of them go up about tenfold in the first year or so of production. Why? Because when they start out production, they start at a fairly low number. It might be 50 tons a day, it might be 100 tons a day, or if it's a bigger mine, it might be 500 tons a day. That's going to do 5,000 tons a day in a year or something like that. But they all start off, pretty slow when you're just starting production. So that's the first thing. In this instance, the stock has, it's just because it's very close to actually starting shipping ore. The minute it ships ore, it's going to be making tens of thousands of dollars per day, and that's from a standing start. That's transformational in of itself.
Look at all the support we're building here, John, at 1,500.
Right. If the company starts out at 50 tons a day, and a year from now it's doing 500 tons a day, if 50 tons a day is 300, it's 30,000 a day. a year from now it's 300,000 a day. You don't have to be a rocket scientist to realize the company is going to become incredibly valuable. And,
Right.
and if you do the math, you might come up with a kind of number that you were looking for. It's not, it's if the company is doing 20 million a year, 20, 30 million a year, which would be, probably the range might be in even the low end at 500 tons per day, be more like 50 million a year. Obviously the stock has the potential to be somewhere between $2 and $5 a share. So there's tremendous upside in all the metals, especially look if gold goes to 2,000, the numbers on this company will be eye-opening. They'll be eye-opening. So that's something to keep in mind. Now, if you go back to NVR.
NVR, sure.
Yeah.
Okay.
If you can go back to the 90s, the early 90s.
Okay.
This is a chart for the ages, this one.
Okay, I'm in the 90s.
Okay, we've seen these bases before. Go all the way back to 1990. You can't actually see it on this chart.
I get back to 88 right here.
Okay, well, if that was around the time of the real estate, from 87 crash, and then, the crash of 87.
That's when mortgages went to, what, about 18%?
Right, exactly. So when in the 87 crash, there was a downturn in the real estate 3 or 4 years later when the savings and loans blew up and everything like that. This company, believe it or not, I mean, it's hard to believe. Look at the chart. It went into bankruptcy. It was in bankruptcy. And the chairman of Santa Fe Gold, Brian Adair, put in $1 million into that company in bankruptcy. And when it came out of bankruptcy, I mean, look, you invest in a bankrupt company, it's a highly risky proposition, as you probably know. Mm-hmm. There's no guarantees. And he put in that $1 million. And when they came out of bankruptcy, they gave him 1 million shares. So look at that chart and make your own. I mean, this is a legendary investment by any measure. And when Santa Fe, unfortunately was in the same position 3 years ago, he came in and did the same thing. And right now, this company only has to go to 36 cents a share, and he will be the only guy in history that was involved in two companies that went up more than 370-fold. So that's quite a thing in of itself.
Lightning can strike twice.
Yeah, and but I mean, look, he's got, obviously, the smart thing to do if you could live your life over would be to be buying more NVR all the way up, right? He's been doing that with Santa Fe. It's obviously, he's just disclosed that he's been doing that with Santa Fe, and that's the right thing to do. As we recommended Apple at $4 a share back in the turn of the millennium, and the smart thing to do if you had the money was to keep buying Apple all the way up. Same thing with Amazon. That's what you should be doing. So anytime, one of the look, I've met Jim Rogers a few times on the phone, and I've talked to him quite at length, and he used to always say, anytime you see a company where the fundamentals are ahead of the stock price, just buy all the shares you can get. Buy all the shares you can get. And it's a very valuable advice because you've seen living proof of it right in front of you there. And, it's hard to fathom today, but what Santa Fe has been able to put together in the last few years, nothing short of phenomenal in terms of its potential value in the future, especially if gold and silver go to these higher levels as expected.
Are you familiar, John, with this company right here in Australia, out of Australia? I don't think it's publicly traded, but one of our traders, Fuad, he was just sharing some information with me here. I think you'll find interesting. His family bought a controlling stake in Gandalby Gold, which later became Gandalby Metals, turned out to be an iron ore reserve. After the reserve status was confirmed, the shares tripled in price. That would be the fallback if gold wasn't found. And he said the company used to be on the ASX. So he and his family got out back in 2011.
Well, look, the way the world is going, I mean, there's something really, it's kind of amazing if you think about it. If you turn back the clock a bit, we've been talking about the metals now for a couple of years. They've had a run up right after the Trump election. There was a run up in 2016 with the Brexit, if you remember, and then came down, and it's kind of been a bit of a roller coaster, and there was you couldn't really get your arms around what was going to be the driving force that was going to produce the kind of moves that we've seen in the metals recently. And as I said, as I said on the show, there's something monumental going on with these metals that is much bigger than I think most people realize. But it's starting to dawn on them. The fact that there's $16 trillion in the world now in banks where you actually have to pay the banks to park your money there, is making gold very attractive in of itself. $300 ago, we made a big song and dance about the fact that Sam Zell, who's one of the smartest guys that ever lived, financially speaking, he's worth, he sold his 40 billion real estate holdings at the top of the market in 2007, and he bought back in, he bought into the oil industry right at the bottom in 2014, and has been doing pretty well on that. And he bought gold. Are you ready for this? I mean, he bought gold. This guy had the chance to buy gold from $35 when he was probably in his 20s or 30s, all the way to where it is today. And he started buying gold at $1,200, $1,300 for the first time in his life. I mean, when a guy who's this successful, this is a billionaire, multi-billionaire, who you could define as the smart money, the leading edge of smart money, and he's coming out and saying, I'm buying gold. He's not buying it for a 10, 20% rise like we've already had. He's buying it for insurance on the future. He's buying it for, for 10, 20, for a double, triple, quadruple times upside, maybe more. And it's on its way. And then you got Tudor Jones coming out. I mean, Tudor Jones is one of the smartest traders of all time. And another guy that I've run into before, and he's looking for a fast rise to 1,700, and we're only a couple of $100 away from that now. And then you've got the Bond King, who's looking for 2,400. He's been looking for that for a while. Then you got Kyle Bass. He's saying that situation's insane right now in the world. And then you've got somebody else just came out a couple of days ago and said that gold's headed for 2,000 to 2,500. So there's something, and the fact that look, these banks spent about $30 billion trying to hold the gold price down, trying to break the price down, and the gold's at a new high today. I mean, it's blown them away. So that there's a huge, it's like an eruption of buying that has overwhelmed the market. Then you got the yuan falling in China, and that's reason for more and more Chinese to be looking at gold as a way to hedge themselves. And then there's increasing talk that the future of Bitcoin, the ultimate Bitcoin, is going to be a gold-backed Bitcoin eventually, and that's. So there's all kinds of compelling reasons why gold is
just before I forget, starting tomorrow, we're going to be talking more and more about the gold-backed cryptocurrency that I now own, and I'm going to give you guys lots of information so you can do your own due diligence. You just heard it from John that It's maybe a thing, and so if it does become a thing, I'm not going to be looking at it from a forlorn, with a sad face the way I did with Bitcoin. So, all right, enough said about that. But
Yeah.
I'm going to give you guys
so
equal
there's something
opportunity to
enormous
prepare.
going on, and look, this PMI dropping down, and the whatever it is, the world is slowing down, and it's going to take a lot to turn it around. And somebody said, oh, Mark Mobius, Mark Mobius, he's come out, he's in the news today. I mean, Mark Mobius is a guy who, I don't think I've ever heard him say, buy gold now, like, buy all the gold you can get. He's
Right.
basically saying, buy all the gold you can get. You should have 10% of your portfolio in gold. I've never heard this guy say that before.
Well, here's a comment. No one doubts gold's potential. When will Santa Fe show their extraction results?
Well, very soon. I think within a matter of, there's a lot of stuff coming together in the next few weeks, and I think when that happens, the world will start to get a sense of what's going on, and I think it could be very dramatic. So, my perspective is that it's a situation where the fundamentals are way ahead of the stock price. That's my perception. That's my perception of what's going on. There's an awful lot of assets has been acquired, and the more the price goes up, the more valuable those assets can become. I'll tell you, there was a time. When you held a stock before, it should have gone to $5. You know why? It should have probably gone to $10, because I found a company that I recommended to the management at the time that they acquire, and it was called Western Gold, and it had tailings. It had 3 million tons of tailings, and the price of the stock was about 12 cents a share, and it's possible we could have picked it up, or Santa Fe could have acquired it for 15 cents a share, right? And the one issue was that the cost of production was about $500 a ton back then off these tailings, and the price of gold at the time was about $475. It hadn't gone over the 500 level yet, but so that was a legitimate reason for not doing it. But the company had just acquired a property with 2 million proven ounces in it. And this way, I mean, it was a no-brainer. The company had a value of $150 million at the time, and it could have increased its gold holdings from 2 million to 5 million ounces overnight by spending 10% of the value of the company. I mean, it was just absolute no-brainer by any, and unfortunately, it didn't happen. You know what? This was about in February of that year. By the middle of the year, gold was about $600 or $700. That Western Gold was trading at, I think it went to $1.50. Yeah, it went to $1.50. $1.50. It went from 12 cents to $1.50 in half a year.
Right.
In 5 months, right?
Mm-hmm.
And that's just on the assets. They weren't in production or anything. That's just sitting on tailings, not even a gold mine. It's just tailings, which are from previous gold workings. And then when the price went up to like $700 or $800, because the economics improved from the value of gold, right?
Right.
All of a sudden, that stock was $3 by the end of the year. Can you imagine if that Santa Fe had made that deal? I mean, the stock would have probably gone to $10. So, because guess where Western Gold ended up going and getting taken over? It was about $9 a share. When it up going for. So this is a very, when we get in a real strong bull market, it's going to impact the valuation of these stocks as massively as what could happen before, and what did happen to a junior mining stocks that came out of nowhere and didn't appear to have much value at the time, right?
Right.
So and the reason why it went from $1.50 to $3 that same year was because they were able to come out, and because of the increased value of the gold in the tailings, they were able to upwardly revise their holdings from 3 million ounces to 6 million ounces. Now, nobody could have seen that happening before it happened, but that's why these gold miners are likely to go substantially higher in time, because the higher the gold price, the better the economics of, even if you've got if it's great to have a quarter of an ounce of gold per ton, or somewhere between a quart and a half, those are fantastic economics to have today. But imagine, at $2,000 an ounce, 0.1 of an ounce per ton is going to be economic, 0.1 of an ounce. So that, and you can, it's hard to walk on the ground in New Mexico without walking on ground that's got that kind of gold in it.
You find elephants in elephant country.
Right, and listen, this isn't something that happened overnight. These acquisitions were made very carefully, and because of relationships and fortune and fortuitous developments that happened at the time, and before anybody was paying attention to gold, right under the noses of the big boys. And guess what happened? Right after, the next thing you know, BHP was knocking on Santa Fe's door a while back, and Rio Tinto, and there's some pretty big discussions going on at the time about various prospects, but because the gold price was so low, nothing unfortunately came from it. But you know what happened? Not long after that, somebody noticed that one trucks with BHP logo on them, and the very same day, BHP and Rio Tinto were out staking 20, 30 square miles of territory all around Santa Fe.
All around.
So, this is a big deal, and fortunately, the territories that have been acquired, certainly we've got enough territory as far as the eye can see, in terms of future production and future opportunities. So it's certainly a very compelling situation, and it'll look, everything's going to just happen, and things will happen. When you're any kind of a mining operation, can only happen. Everything takes time. There's a lot of preparation involved. Get production up and running, but once it starts, it tends to continue, and it gets bigger and bigger and bigger, and that's obviously all part of the plan. But it can be a little difficult, or just as you're starting production, there's a few final things that have to be done, and as my understanding is, they're fairly close to that right now. So, as per recent releases, they've made announcements saying that, they're producing ore ready to be shipped soon, and you can probably count the days down now to when that's actually going to happen.
Yeah. Let's go to this one more time real quick. I know another question from John. John, thanks for the question. That's a great question, a question that a lot of people have. And let me just read it verbatim. Is buying GLD, which is an ETF, is buying GLD as good as owning the metal itself? Everybody knows where I stand on that, most people. You want to tell them where you stand on that, John?
Well, look, there's always,
okay, it's a scam. You can say it.
The thing is, back in the 30s, I think there was a time when the government confiscated gold, or there was a time. So, everybody always brings this up and says, well, there's a risk in this sector or that sector, and you shouldn't be doing this or that because of what could happen. Well, I don't believe the government's ever seized any gold mines other than in Venezuela. And by the way, what's keeping the Venezuelan government today going? It's the gold mines. That's how they're. Yeah, it really is. They seized some gold mines probably 10 years ago, and maybe they weren't active for a while, but the desperation of the government in Brazil, and the value of gold in which has gone up 1,000,000%, by the way, 1 million, or maybe 1 million times. I don't know if it's 1 million times or 1,000,000%, but it's big. It's gone up massively, has made gold mining obviously a highly profitable operation, and they're being exploited very dramatically there. And one of these days, everything's great in the U.S. right now with the high dollar and everything, but it's that cannot last. We're in a kind of a down cycle in the dollar with an upward interruption, but we're still quite a ways off the highs of 2016. And in just the same way as the market came down earlier on today, we've seen that happen a few times with the dollar, and then it's managed to pick up its feet and kept going higher. But if the dollar suddenly breaks here in the next month or two, which it probably could, that could change everything. That could really increase the price of gold very dramatically, very quickly.
Now, John, my take on GLD, all right, it's an ETF. If you have a prospectus, perhaps they've approached you, maybe you've looked into it, I want you to go to the middle of that prospectus. I showed this on the radio program one day. I had the PDF, and I put it on display for everyone. I don't have it at my fingertips, but if you can't find it, I'll find it for you. Clearly states in the prospectus that they may or may not actually buy any gold at all with the money that you give them. In fact, it makes it quite clear that they are in no way required to ever purchase one stinking Krugerrand or whatever of gold. That's not the business they're in. What they're in the business of is posting the price of gold and then posting the price of their ETF based upon some kind of percentage that they've worked out. And so what you're doing is you're buying shares, if you will, in somebody's projection of gold price. I mean, it's a house of cards. Now, can it be used as a trading vehicle? You bet. If I want to go long gold this morning and get out this afternoon, maybe stretch it over a couple days, sure. But I'm going to make sure that it's money I can afford to lose, because that house of cards is going to collapse. There's going to come a day when people are just not going to fall for this anymore. So trade it, okay. Invest in it, I cannot recommend it. I also don't give individual financial advice. That's not within my wheelhouse. So I'm speaking to the audience in general here. I'm just telling you, me personally, I would never put a dime of my money in GLD. What really aggravates me, the reason I sound passionate about this, is there's so many people out there, retired people, who they've always heard that a certain percentage of their money, their portfolio, should be in gold. And so they've bought this ETF thinking they actually have exposure to physical gold, and nothing's further from the truth. And our government, the SEC, they just stand by with their arms folded and let it happen. But the comeback is, well, it's right there on page 37, paragraph B, of our disclosure. It's just wrong. Okay. All right. Yeah. Back to you, John.
Can you put up Boeing?
Where's Dr. Tom? Hey, Dr. Tom. Yeah. Oh, no, you know what? I completely forgot. He emailed me the other day and said, Dwayne, I'm out of town. I got to go to a conference. So sorry for the false Dr. Tom alarm I sounded earlier. He won't be here today. He'll be back next week. All right, John, can I put up a chart of what?
Boeing, BA.
Yes, sir. Coming up. Well, I'm going to fix that. BA. Okay. Got it? That's
not so
monthly.
long ago.
You want to go daily?
Daily, yeah.
Okay,
yeah.
there we go.
Yeah, not so long ago, we sort of said, I think, when it went a little bit lower than this previous bottom back in June, we probably said that was about it. And it's actually been acting really bullish in the last few days. And now it's actually quite impressive the way this thing. I think the worst is over for Boeing, unless we have a really bad downturn here. In which case, I would think Boeing would be a pretty good buy, because if they do a deal with the Chinese, I think the Chinese are going to have to buy quite a lot of jets, and they're probably getting a bit scarce at the moment.
Yeah.
So, it's had quite a long correction too, good 6-month correction. So, the company, they certainly got hurt by the these two crashes, but it's kind of what's the word? Unsettling that these private jets are having a lot of accidents lately. Boy,
Are they the same? Are they the same models?
No, well, the two recent ones were, I believe, there were Cessnas. Those last two that just had their problems in the last week. I think you have to give the luckiest people on the face of the earth. A week or so ago, were the Russian travelers, the travelers on that Ural Airlines that he landed in a cornfield. I mean, this guy, he got a medal from Putin and everything. I mean, this guy's certainly up there with Scully.
Yeah, the guy that landed on in New York. The guy that landed.
Yeah, but those people are so lucky to be alive, boy.
Yeah.
And not too many injured. I mean, it's just incredible. I mean, because if the plane had broken up, it would have been terrible. But it didn't happen, and they were able to get off. And it was an Airbus plane. So their Airbus planes are very well built. If you look at the wings, the way the Airbus wings are, especially on the A380, I mean, they're really a big deal, on those planes, and maybe that's what saved them. The strength of the superstructure and of the body, and the wings probably saved them. But because look at it's no fun. I mean, remember, the plane just took off. It's full of fuel. The plane was full of fuel. Think about that. Mm-hmm. And they were able to get everybody off without exploding. I mean, it really is. I mean, joy that it's just incredible.
Question for you, John. In regards to gold, Fuad, who agrees with me that with these warehouse receipts and ETFs and whatnot, that you never really know is your gold there or is it not there. But he wants to know if you have any interesting option type trades that would allow you to take advantage of the rising price in gold.
Well, yeah, you could go for options on futures, options on gold stocks. That's sort of probably the highest leverage way of getting in. I mean, look,
is that a chart I could pull up or something?
Yeah, well, I mean, like just take Royal Gold, RGLD.
Okay. Options are just completely out of my wheelhouse, but I should learn.
If you'd bought $100 options back in May, when this thing was down at 84, probably wouldn't have had to pay too much for them, right? Mm-hmm. And even $90 options. I mean, you'd be up.
I have option chain charts for
you'd
futures,
probably be up 20 or 30 fold on that trade by now. Something really dramatic. Are options available on most publicly traded companies or just larger cap ones? Yeah, most of the big ones, yeah. And there's options on, I think there's even options on the JNUG and the Nugget, which are a very highly leveraged way of going. I mean, if you put up the JNUG, let's see, I mean, Royal Gold went up from $81 to 132, right? Which is probably about a 40% rise, something like that.
Futures, Forex, crypto, index, economy. So when I typed in options, I did get some option stuff up here, but apparently it's not.
Put in the JNUG. No, just JNUG.
Just plain JNUG. Okay, I'll do it. One on daily?
Yeah.
Okay. There we go.
So we've gone from look at that. We've gone from 33 to 90 to 100 rather to 100. So I mean, boy, if you'd bought $40 or $50 calls on that,
and that's such a healthy, beautiful pullback right there. This thing's about to
the next one
take out
is going to be it's going to be very big. It's going to be very big. It's probably going to go to about 130 the next leg up. So
Fuad's question for you on that Royal Gold. Let me just go back to that chart for a second. Do you like selling puts and buying call spreads?
I'm not really into that, but it can be a very profitable It's a way of sort of paying for the option, because when you sell the puts, you get money, and to buy the calls kind of thing, but you have to be right. You have to be right.
And you got to be really smart. So I don't know, maybe above my pay grade. What about leaps? There's a question there also. And I know Dr. Tom one time talked about leaps, but I'm not that familiar with them.
Yeah, you can. I'm not either, but leaps can be pretty profitable as well. They can give you, it's sort of any look. By the way, I own a very large holding in Santa Fe, but I'm not recommending the stock either. Just like you, it's up to you if you want to buy it. But the thing about Santa Fe is you're buying a long-term call option right now for 8 cents, basically, without expiration. It's gonna, in other words, as long as, so it could be, if you buy it at 8 cents, it could be, who knows where it's going to be in 4 years or 2 years from now. But that's a good way to think about it.
Yeah,
and another way, look, Peter, both Jim Rogers and Peter Stadelmeier both told me one of the smartest ways to invest is if you're trading, if you're following your logic, or the good advice that you put out every day, and you're building up a portfolio, and you're using your step-up approach, so you go from 1 to 2 and 4 and 8 and so on. If you can take that money, put that into something like Santa Fe or an option, a long-term call option on gold, then you're sort of getting a double whammy, because if you can pick something that has 10 or 20 times upside in the future from the great work you're doing, just building up capital from trading, that is a fantastic way to make money, because
it is a way to leverage your profits. It certainly is.
Because you're basically using the market's money to get into a situation where you basically don't have any risk, because you've made the money already. And anytime you make
the risk is, though, you can lose your investment capital. That's the bottom line risk with all investments.
Listen, after what happened to Citicorp, there's no stock in the universe that is
impervious.
Exactly. Remember, if Citicorp is $55 a share at its all-time high, stock went down to about 60 cents. I mean, devastating. And you had GM. In fact, by the way, go back to the NVR for a minute.
Sure.
Because this is a very interesting story here. And by the way, NVR is a very interesting study right now, because if you could just squeeze it up, where I actually said it's probably heading for new all-time highs soon. And
it's close.
But look what happened. So NVR is a casualty of the interest rate rises. That 10 times up interest rate rise is personified by this chart big time. As soon as the Fed started raising rates, it really, because NVR is a high-end kind of real estate company, and as you know, where did the pain get felt first? In the $40-50 million apartments in New York, and houses that were discounted 10, 20, 30 million to get them to sell, right? And the London real estate got hit. All the Russian, there was obviously when the 2014 oil peaked, all that money, so as they started raising rates, real estate around the world has suffered. But I think this chart is very encouraging, because it's giving you a sense that the real estate market is recovering, and there's another leg, there's another up leg to go before the real estate market, has some sort of major trouble, which probably is going to happen in the early 20s. So I think real estate's pretty secure for the time being. But what I wanted to point out about this chart and this company is I looked at their deal, and they've got a lot of debt, right? And imagine, they had that debt, and the stock went all the way down to almost 2,000, went back to where it is today. If I was the CEO of this company, I'd be getting rid of that debt real fast, because, even though this company is looking like it can never do any wrong in the future, stranger things have happened. It could get into all kinds of trouble if there's a big downturn in the future, and they're laden with debt, because debt is a killer. That's what puts companies like GM, the old GM, into bankruptcy. Their liabilities, from years of superannuation and all the pensions and everything else. And if you remember, I said it on this show back in the early 2000s, when GM was $100 a share, I said they should be doing an offering here at $100 a share and getting rid of all their debt and all their obligations. And if they'd done that, they'd have never gone under. It would never have happened. And we talked about that. Remember the Crocs company, Crocs?
Yeah. Oh, yeah. The shoes. There's some ugly shoes,
Yeah.
but yeah, I
Same
remember.
thing happened with them. I actually said it when this stock was at the top. Why are they holding their debt? And corporate debt, by the way, this is a thing that just came out about the gold today. The corporate debt today is at higher than ever. So this is
So
a
is
real
student loan debt. So is personal credit card debt.
Yeah.
We're a debt-ridden nation, but you know what? Our government is if for a child, if their parent is the example that they follow and who they become, well, for citizens, our government, their behavior, we're going to model that. So we're in as much financial hock as our nation. It's a sad situation.
One of these deadbeat Dems was going on about this last night, and saying, about the debt, the U.S. debt, and to a certain extent, he's got a point, but they're obviously ribbing Trump over the tax cut, but they don't understand the reason why the economy is doing so well today is because of the tax cut. I mean, if you don't get that, you're not in the zone. But nothing is for free, and they're obviously they have to spend some money to do this tax cut. But what would you rather have a market valuation of $10 trillion higher? I mean, did they really get a good bang for their buck? Of course they did. They not only got the employment and the improved revenues and taxes and everything else, and the general well-being of the economy, and attracting all kinds of new companies into the U.S. I mean, the benefits of this tax cut are absolutely incalculable.
Everybody's concerned, John, about what happens when the music stops and everybody's scrambling for their chair. Well, you have
to deal with that. You have to deal with the hand you're dealt.
As long as the music is still playing, dance. Don't worry about where you're going to sit when the music stops. Water seeks its own level. We're America. You're an American. We'll bounce back.
I mean, if they hadn't done this, it would be down the drain by now, because America was losing its. I mean, look, they lost 70,000 corporations. 5 million manufacturing jobs gone. Fortunately, they're coming back, but 5 million gone.
Hey, wait! Barack said they would never come back.
Yeah, exactly. And so, we're definitely repairing the damage, but it's a long-term process. But 10 years ago, the U.S. was number 10 in the world of competitive. Now it's number 1. So and it's only happened in a couple of years because of the tax cuts. I mean, it's a no-brainer. I mean, all these people say, it's only for the rich. It's not for the rich. Without that, the companies, if it wasn't with that tax cut, companies wouldn't be able to employ all the people that they're employing today. They're the people who create the jobs. And
but these these late night talk show hosts, who's the one guy, they keep playing the soundbite of him saying
the one who's begging for a recession.
He hopes we get a recession. They hate Trump more than they love our country.
Yeah, I know, it's so sickening. It's sickening. But
we need a gulag. We need a Russian
tribe that comes out on CNN every night. It's just sickening. I was listening to it last night. It's just horrible. They're so negative. It's just incredible that these people talk this way. And they should be. I mean, we should be optimistic about the future. I mean, what's not to like about where we are in the world today?
They should be kissing the president's toes after what they put him through over the last couple years.
Been before, and even this guy, who used to lead the Democrats, the senator, came out and said a couple of days ago, quit this talk about healthcare for all and all this nonsense. It's just not going to happen. And giving, this business of giving, let's take care of the vets and the homeless and the citizens first, and help them before you start handing out goodies to the rest of the world and inviting an invasion, if you like, of immigrants. So but look, there is an issue and there's a point. The problem today is definitely affecting, back in the 60s, we did grow at 5% a few times. The growth was higher under Kennedy. I think the economy grew at 5% plus. And obviously, ever since then, we've been getting a lesser bang for our buck, mostly because we're paying more and more interest on the debt as the debt gets higher. We're paying $350 billion today, and China's not buying any bonds right now from the U.S. I don't believe, but to say that they're buying, that China's buying the bonds, or they're basically paying for our debt is not really true. But the fact of the matter is, it is $350 billion, and in a few years' time, it's going to be twice that. It's going to be 700. It could be $1 trillion, because if the interest rates do go up in the future, the extra cost of the debt could rise to as much as $1 trillion. So in other words, before we spend it on anything on infrastructure or on the government or anything else, the U.S. could find itself literally in a few years' time, maybe 3 or 4 years' time, could find itself paying $1 trillion in debt, to pay for the debt that could put us in a big crisis situation, and the whole world's in the same boat. You got the problem in Germany and China. You got a unknown debt situation in China that could be a huge house of cards. That's very vulnerable. You got the debt in Japan that has been an unbelievable drag on that economy. So that's the reason why we've got these. That's the reason why gold is going up today, because there's nothing that's going to change. Right now we're going to be adding $1 trillion in debt no matter what for the foreseeable future, and the debt is going to rise faster than the GDP unless they do something magical like what Kashkari is proposing, where we could really grow the economy at 5 to 7%. I think if the economy grows at 5 to 7%, you will. And by the way, one of the ways to avoid this problem today is an infrastructure bill. It's very unfortunate that they didn't get that vote to do the healthcare makeover, to end Obamacare.
Right. If
they had done that, they might not have lost the House in 2018, or they might have lost it by a lot less. And so, that's really just seized up the legislative process. There's nothing getting done. And yet that infrastructure bill could have been passed, and that could be benefiting to both parties going into the 2020 elections. But it doesn't look like it's going to happen now. It's probably going to happen in 2021, 2020, in the next round, and it might be $2 trillion. And that $2 trillion needs to be spent because the infrastructures, there's enough infrastructure projects to justify $2 trillion expenditure. And $2 trillion would be an unbelievable boost to the economy at this point. That could boost growth to 4 or 5%. Don't you agree?
I do, John.
And they should get on with it. Instead of all this fighting, they should get that done immediately, because the sooner they get it done, the better.
Yeah, I agree. Now, you were talking about
and there's no time to do it like when rates are low. It's like repairing your roof. If your roof gets blown away, and you're going to get it fixed no matter what. But if you can do an infrastructure bill, it's like the 50s. How do you think they financed all the highways and the freeways and everything back in the 50s and the autobahns in Germany? They did it because rates were so low at the time. it made sense to borrow for the government to borrow to finance these incredible infrastructure projects. And you know what? We're in the same boat again today. If the Fed can get rates down a couple of points, it would be foolish not to borrow as much money to build the economy for the future.
I agree. Speaking of healthcare, I wrote an article over the weekend. These are just some charts, but I'll give you a link to the page if you want to look at it later. But my question that I posed was, think the good life is out of reach? Now take a look at this place right here.
I know, I saw that yesterday.
In Ecuador, yeah, 189,000. But you were mentioning healthcare, so I wanted to scroll down here real quick to where I talk about healthcare. People also visit Manta, which is on the ocean, for tourist dentistry and surgery. Healthcare here costs pennies compared to the U.S. and Canada. The price, health insurance, can be purchased through the government once you've established your residency, which is pretty simple to do. It's very inexpensive. $70 a month for a single, $80 for a couple. Medicines and examinations are included, as are surgeries, dental work. Medications are mostly generic, but of a high quality. People can even get their insulin on this program. It's the same insurance that Ecuadorian citizens enjoy. Now, John, how come they can do that for my wife and I? My wife and I, no pre-existing conditions. Arizona is one of the most expensive insurance states in the country. It's over $3,000 a month.
Yeah, all the salaries, look, the salaries are all much cheaper, much lower down there. That's the first thing. And the whole structure is much lower cost, including the drugs, including the medicines. So, they've definitely got, and I guess the insurance system, since it's pretty much, I think all citizens, I don't know, it's not mandatory, but I think it pretty much covers all citizens, is enough to take care of the sick, so the healthy people basically subsidize the,
right. Yeah, as it should be, is that, yeah. So if you haven't read this article, you might read it. I know you've seen the world based on your past job, one of which was captain of the Love Boat for anybody, or navigator.
No, not quite. I didn't actually. Captain of some other ships, but not the Love Boat. I was just a navigator on the Love Boat.
Navigator. There we go. Okay.
If I'd stayed long enough, I could have made it, but I changed careers.
I think you made a good choice. Now, also, have you ever seen this on any other website? Talk to a trader. Got a question, need it answered right now? No problem. Click here to be connected to a trader. Now, most places have customer service. You can call and talk to some receptionist or some administrative assistant that works for your broker who's never even put on or taken off a trade. But here you can come in, put in your name, put in your email address. You can actually talk. Myself, Michael, Valerie. That's pretty cool, right?
Uh-huh.
Yeah, I thought so. I don't mean to toot my own horn, but it's lonely at the top. So sometimes you got it too. There's nobody else around. No, but you do a good job. You're always very complimentary, and I really appreciate that. This is downtown Manta, the Malecon, right on the water. Just the thought of going there and living and my wife and I were headed there. If that phone call had not come in that day, with the state of Arizona asking my wife and I to adopt our children, we would probably be having this conversation. I would be in Ecuador at this point, but we wanted to take care of the kids, and so we gladly adopted them. No regrets. It's not been a walk in the park, but my grandmother, when I first gave her the news, now this goes back about, Gabe came when he was 4 originally. He's 17 now. My grandmother goes, son, do you realize how old you are? She said, isn't it a little late to be starting a family? I said, well, I didn't ask for this. It just showed up on my doorstep. You always taught me to do the right thing. What should I do? She goes, well, you're doing it. Okay, well, you taught me well. So anyway, to rent an apartment, if you don't want to, just look at utilities, $100. And the internet, you got to have good internet. Now, civilian internet's kind of spotty, but it's available and it's real cheap. But if you want freakishly fast internet in Manta, Ecuador, they will lay fiber optic from their facility to your doorstep flat rate, $200. You can drive through town and see guys digging a little trench, and you can go, yeah, there comes my fiber. $200 delivered to your door if you're in with a certain geographical area in Manta. And then after that, you pay $150 a month. So there's some people that pay that already here in the U.S. for internet, especially for freakishly fast internet.
Yeah.
So anyway, I just talk about all the benefits of living there, but it all hinges on, as a trader, if you're going there and you're planning to trade for a living, you must be consistently profitable. It's only one acceptable answer to, are you consistently profitable? Has to be yes. And anyone can put on a profitable trade, but it takes talent to turn a series of profitable trades into a reliable and consistent income. And so you don't jump off the deep end with our methodology. You start in SIM, you put together 10 consecutive days in a row, meeting all the requirements, go live with one contract, increase your account balance by $2,000, add your second contract. Then you go on a calendar-based schedule. You'll know when you're going to add the next contracts. But the beautiful thing is you're financing from within. You're growing your business from the ground up, from within, because after the first contract, every contract you add is underwritten with profit you earned in the market. And to me, that is just a beautiful, beautiful way to scale a business. I don't know of any other business that you could scale that simply. Not easy, but simply. What about you, John?
No, well said, well said. And as I've said before, there's hardly a downtown we've seen since I've been on the show, and that goes back a long time.
It does,
that you haven't nailed.
Last night on the S&P, we caught 29.16 on the way down. So that was 11 points, and it found support right at the weekly trading zone. The Dow rallied up and sold off. No, we never got triggered on the short side. Russell, we had a little two-sided action in the NQ. We did trigger on the short side. That's a $900 per contract move, guys, and it stopped on a dime right at the weekly trading zone. Now, these numbers went to our partners Monday morning at 6:15 a.m. Eastern. So if you were on the trial, I would have sent them to you too. All right, go ahead, John.
No, I think, look, you've come up with some innovations that are not really seen anywhere else, and your weekly trading zone is a very big deal. There's a lot of value to it, and
we may not be better than other people, but I know we work harder.
Sure, no, you do, and you do a great job. But look, it's just like what I said about Jake Bernstein a while back. You had a brief interlude on CNBC, and to be honest with you, it didn't go that well for him.
Why is that? Was he just not a TV personality kind of guy?
No, he did well. He was good at that point. He was quite a good presenter, but some of the trades didn't go well for him at that particular time.
Yeah, that's the thing of being a trader, man. You're only as good as your last trade. That's how people judge you.
And in the grains, he was doing a lot in the grains at the time, and I guess that's why the show didn't last very long. But and it explained, that it's no walk in the park. You have to be very, you have, as he said, 80% of success is discipline. You have to be disciplined. You can't just, you've got to be in it to win it, and you've got to put the, you got to put those stops in like you do. A lot of times your stops, when they're above the market or below the market, they're kind of tough to, to follow. I mean, no system, if it was so easy, everybody'd be doing it,
That's right.
So, it is tough. And one of the reasons why, when you get triggered into these either rallies or sell-offs, just by being there and getting executed into it, I mean, you've kind of got the wind at your back as soon as that happens, because
exactly.
Where you place these stops generally are momentum areas. It's what I call, it's like getting on the train. The train pulls out of the station. It's a matter of hopping on and deciding how many stops you're going to ride until we get off.
Now, as the train came through this station, I mean, look at the momentum, the wind at the back on this short trade here. Dropped 45 NQ points from 76.99. Now, did we catch this up here? No, we didn't. And we're not ashamed or embarrassed of that, because up here was not high probability. When I drew this line in the sand, if price hit 76.99, then I'm all into the downside, because that is the highest probability thing.
Yeah.
So, I
So,
mean, it's that simple, and it's simple by design, folks. We didn't come across this simple method of trading by accident. Oh no, we had to grind through all the other stuff everybody else does, the endless indicators and mystical oscillators and secrets your broker doesn't want you to know and gurus and crystal balls and all the garbage until we finally cleared it all off so we could see daylight and see price, and there was the answer right in front of us all along.
yeah. Could you put up the palladium?
Yeah, sure can. Coming right up.
You missed an A.
Oh, did I? Oh, there we go, yeah. That'll help. Okay. All right.
Okay, look, that you see this big kind of swing sideways consolidation.
This here?
I mean, yeah. I mean, look at the crash that this thing had at the beginning of August and how it's come back.
Mm-hmm.
Yeah, it just
Oh,
won't
August,
quit.
okay.
Yeah, and so it does, and it does look like the palladium might be ready for another leg up here. And that if you notice, if you probably go back and look at, I mean, look at that bottom in June that led the gold rally, right? From down there to 1600. We could be, obviously, I think everybody would agree that if we break out above 1600, we're probably going to head for 1900, maybe going on 2000. And as you know, I got about a 2400 high point for the next, for at least for palladium. If you could put up platinum now.
Sure. Platinum. Okay.
What's interesting about platinum is it kind of looked a bit grim a few days ago, and then they put in a nice little bottom. And I said a few days ago, it looks like a three-wave pullback developing, but it's a more complicated. Look, when you got a really bearish type of situation, which we have had with platinum, the one thing that is happening with platinum is we've had three bottoms now, and each bottom has been higher. But we've had these, it's not giving up the lows too easily just yet, right? However, we're starting to see upward, impulse waves to the upside. And what that looks like to me, I would compare this chart to August of 1982 in the Dow, where we had a kind of a rally. We had a rally in the spring. And just like April in the platinum, and then we had this big drop down into what turned out to be an August low, where it kind of went to a new low and freaked everybody out. And that was when Granville said, sell the market right at the bottom before the biggest bull market in history started. And what was remarkable about that time was there was a couple of 1-2s, if you like, that actually even went a bit lower, and that can happen in Elliott wave. The first 1-2 was a double bottom, if you see. The second 1-2 was a retest, and yet it came right back up, right? So, but what's interesting now with this little breakout here, especially going into Thursday, Friday, is we might be getting ready, especially with palladium going back up too, we might be getting ready for something really big, a monumental upside breakout in the platinum.
There's a $10 window of opportunity right here.
Right.
860 to 870. That's
right.
just...
And I think that would gel with the silver and the gold. Would gel very nicely, and it could be, there could be a kind of a synchronized upside, very substantial upside move in the metals here in the next few weeks. That could start at any time now and could run. And I think the size of this run up is going to be, it could be epic. Especially if
it might happen before we get off the show here.
If the platinum really starts breaking out above 950, heading for 1,000, I think it's going to inspire the rest of the market. And before you know it, the platinum could be up to 1,200. If platinum ever gets to overtake gold, which it could, in other words, it accelerates higher, possibly if palladium goes up towards 2000, I think platinum would catch up, would begin to catch up, and if platinum goes above whatever gold is at the time, that would be, in my view, a huge buy signal. That would be a potential multi-year buy signal in the making. So gold, because traditionally in the past when platinum exceeds gold, it's very bullish, and when it goes to a negative, when it goes to a discount to gold, it's not so hot. But don't get too carried away with the differentiators between platinum and things, because platinum hit 2400, I believe, back in 2007 or 8, and yet gold was nowhere near that at the time, but it actually it topped out 5 years or 4 years before gold hit 1900. Think about that. So it's a very long-term elasticized relationship between gold and platinum. But on the other hand, if platinum suddenly sort of starts going up through the thousands, 1000, 1100, 1200, I think that would be extremely bullish for the metals. And if platinum ended up going to an all-time high, to a new all-time high, getting above 2200, maybe 2400, and exceeds the price of gold, it probably means we're going to go to $4,000 or $5,000 in gold before the end of this run. And maybe even a lot higher than that. It could, there's a outside chance we could get to 8750, which is my ultimate target by 2023 or 4. And there may be many, many reasons why we should be there at that time. So
this move right here, John, that we're looking at on Crude, we had 2 triggers last night on the Concierge Trade Alert. 5580 down to the weekly trading zone, which we expect to be good support, and it was. It's a $350 per contract move. And this one, the swing low, was 5485. So we were just another 5 little ticks, $50 more to the downside. This would have been $1,000 per contract move. Important prices, important areas, almost always tested. Here comes number 3 on deck, guys, so keep an eye on that. Okay. Anything else you want to cover?
Take a look at the copper.
Yeah, we sure can. I have had a few copper alerts here of late, but we haven't been seeing eye to eye on everything. So
see that gold. Look at the way the gold's shaping up there. You can see how that if there's a late, I would say if there's a late advance here this afternoon, I'd be probably
which I think
wanting
will
to get on.
coincide with the decline in stocks.
Possibly, it would be. Look at this copper. I mean, the copper it's making new lows. If you can put it to the daily.
Sure.
Copper does not speak well of the world economy. Now, again, I'm glad we brought that up to the daily, because perhaps here we have a sort of a double bottom developing. Yeah. And with all the stimulus that's coming and the rate cuts and things, it just might be time for copper to, especially with the stimulus in China, might be time for copper to start up. So I think if the precious metals go higher, it might lift the copper out of this abyss that it's in right now. If you could go to a monthly on that, or a weekly maybe, just to see how bad it is.
Let me put it on continuous so I can get more.
Can you squeeze it up so
sure.
Get more?
Yeah, I sure will. Just switch that. Clear the deck. Okay, weekly.
That looks still pretty heavy there. That chart looks actually. And if that thing breaks down, look at the head and shoulders on that, jeepers. If this thing breaks down much more, that could really hurt the market, because the copper, Dr. Copper, the copper, never lies, and a further breakdown.
That's what I haven't heard.
Yeah, no, this could spook the fund managers.
Okay.
If it really does look heavy, it's not. It sort of looks like China did a week ago before it turned up. But again, China's tanking today. So actually, let's have a look at the FXI. See how that looks.
Guys, if this head and shoulders pattern does come down here and break the neckline, and it's pretty much right on top of it, what's called a measured move, which is the distance from the top of the head to the neckline. I just drew a line, that exact distance. That puts copper back down at the price where we had the most recent, truly significant bullish cross. And you guys know how important I think those numbers are. You may have heard me say before, important prices, important areas are almost always tested. So,
well, if you can squeeze it up, go back to a decade or so and have a look at the whole picture, it's probably going to look a lot worse.
Let's see how much I can. I might have to switch to the other platform. You need to get that?
Just 1 sec.
Yeah, go ahead. All right, there we are on a monthly. But I've only got data going back to 2014 on this platform. Let me bring up the other platform. Okay. Don't really want futures, I just want copper. Let's see. Copper. USD. Probably right in front of me, I'm just missing it. All right, we'll do this. And I'm gonna go monthly. Okay. Now we're back in the 90s here. 1989. Yep, that's as far back as we go. All right, so we'll hold that chart so John comes back. Let's jump back to this real quick. All right, the S&P Concierge Trade Alerts last night. Consider being short 29.16. We dropped to the weekly trading zone at 29.04/05. That's an 11-point move. You back? All right, John. Here's copper going all the way back to 1989.
Yeah, I mean it's a big deal. I mean, look, it looks like a three-wave pullback here with this head and shoulders, which would take us down potentially towards the $2 area. After that, that would be a great place to make a bottom right there, and that would fit. Look, if the worst comes to the worst, and we have a month or two of correction. And, the last 3 months of the year, October, November, December, are really strong and positive. That could be, we could go down in the next month to that bottom in copper. Then we could possibly make a bottom and turn up. And the whole, the world economy, and maybe the price of, if the dollar breaks down, then, you could definitely see the price of copper going higher. And in fact, there was an article today about the oil, where the U.S. is going to flood the world with oil in the next 5 years. Really? That probably is going to force the price of oil down a lot unless the dollar is weaker. So it's kind of it's a kind of a no-brainer. We're talking about all this debt. Would you rather have debt today, 23 trillion of debt in today's dollars, or in a dollar that's 50% weaker in the future, so you can write off this debt in cheaper dollars? That's what has to happen eventually. Mm-hmm. Mm-hmm. And the world is going to explode. I mean, the world growth. I mean, look, it's kind of like Europe. If you remember, the 2007-9, Europe didn't really get going until about 2014. 2015, that was when Ireland had that big, grew 21% in 1 quarter, something like that, and sort of led the way up out of Europe. And, Ireland's repaired itself in an unbelievable way since then. Along with, I mean, remember, at the worst point, as recently as 2013 or 14, unemployment in Spain was like 25%. So, you know, at 14%, it's a hugely better situation than it was back then. But but you know, unfortunately, this growth spurt in Europe didn't last very long, and it sort of topped out last year, and the rest of the world was affected because the dollar is too strong. The dollar is a boot on the neck of the world, and you don't have to hear it from me. Just look at that EEM chart, and it all comes clear. It's hurting China. It's hurting Brazil. It's hurting Argentina and all these other countries, and all the emerging countries. As soon as the dollar starts to go down, the world economy should roar higher, and it would also cause the U.S. market to go higher, and the metals and everything else. So it would be, you know, essentially what we were talking about a few days ago, which is, if we do get an upswing in the markets here in the next, you know, like Garrett was saying yesterday, that if we do get a big upsurge into the end of the year going into 2020, it could lift the rest of the world up, and maybe because of a deal with China. I mean, you know, Trump sort of keeps going on about how much China, if China's lost a couple of million jobs here in the last few months, and many companies.
What do they have in the way of social services or welfare there? Do they have such a thing?
Nothing like, I don't think it's anything like what the U.S. has, and so it's a pretty serious situation, you know, that's being manifested in Hong Kong in terms of the sort of protests that are going on there, unprecedented. You know, people like Putin and Xi get worried when they see protests like that, because, you know, nobody knows how bad they can get, or, you know, if they start having mass protests in China, that could be very damaging, and it could be dangerous for the world. So, yeah, I think, look, Trump and Xi, you know, there's always the face-saving thing with the Asians, so you've got to kind of come to a kind of a win-win outcome for everybody,
right.
and perhaps that can be done within the next few months.
Interesting. Very interesting. What else you want to look at?
Coffee is probably worth a look here.
Okay, let's do it. Coffee. I think it's KC. But I don't.
KC and the Sunshine Band.
I remember them. Yeah, what was one? I'm trying to think of one of their hits. KC. And the Sunshine. I know there was a lot of them.
Celebration.
Yeah. Okay. My grandfather, when I was a kid, one of my grandfathers, he had a barbecue pit. He had a Monday through Friday job, and then on Saturdays he had a barbecue pit, and I used to go out and help. But we would usually sell out a barbecue by like noon. You knew it was a good day when customers were coming in, and sorry, we're sold out. And then we would go home, shower, and while my grandparents were getting their showers, and so we'd go out for dinner, I'd go in the living room, turn on the TV, and Soul Train was on. Now, I'm growing up in a small town in Georgia, and I think most folks are old enough here to kind of understand, you know, what that means on a certain level. Not that my family was never racist. They never taught me racism. They taught me, you know, their behavior sometimes belied what their lips spoke. But they were products of their upbringing. But they taught me to not think that way and to not see the world with color. And I'm thankful to them for that. But that was like my one, what do they call that? My secret, whatever, is, man, I love me some Soul Train on Saturday afternoon.
It was kind of your escape.
Yeah, I mean, I was 12 years old. I weighed 159 pounds. So I didn't do a lot of dancing as a chubby child. But, man, I sure admired those folks up there doing it. And once I joined the Navy and slimmed down and learned to drink adult beverages, man, I was John Travolta all over again. So, anyway, had the white suit and the platform shoes and all of it.
Yeah, if you could put up the December coffee.
December, yes, sir. Here we go. All right.
Okay, you know, this after the last rally, which was kind of encouraging, and we did say to sell it up there.
Let's look at daily.
It's gone to new lows now, which is just unbelievable, but it's happening. So, but it is time to be paying attention to this coffee again, because sometimes coffee has a habit of bottoming in the fall, which might be the case this time around. And if we do get a fall bottom, it could be a precursor to a big up year next year. The coffee did make a lower low here in the last few days.
Yeah,
I believe.
Yeah, it did right here. This is a daily chart.
If you know, but if you could just compare it with the previous low back in earlier in the year.
Here we go. That's one.
Yeah, it's almost the double bottom.
Yeah.
So, you know, and remember, look, this is a little bit like the soybean bottom, because we have a daily reversal yesterday, bit of an update today. I meant to mention it yesterday, but I forgot. You know, be ready to jump on this thing, because it could be poised for. I think there was a better. Can you go squeeze up the beans a bit? Because I think there was a better. Maybe not. No.
Now, this isn't futures. This is just.
Yeah, no, on the futures there was. Remember, the bottom was actually very similar to the coffee. It was actually a reversal. It was an up reversal that day, and actually the beans look kind of dynamic there, in spite of the troubles they've had. You know, if the beans started. John. Yeah, if the we did see the bottom. We got to see check out the bottom. Very similar to the coffee bottom, but the coffee bottom actually looks better because it's a positive doji. So just keep an eye on that, because you know the coffee had a pretty big rally up to 120, which means that the next, with this bottom now, the rally could be even bigger. And I would even say, look, probably 88 on the beans there, 88.70 rather, right there. Is it 770? Yeah, about there. If it breaks above that, you might want to go with the beans.
I like the beans from 88 up to $9. I mean, that's only 2 points, but it's $100 per contract.
It could be very, very dynamic, and you know that could help the metals prices up too, if that happened. So, and you never know. Look, we're getting it. We're almost in September now for the meeting. You know, the next meeting with China. So that's another reason why the market could still, in spite of its wobbly situation right now, could still, you know, they could pull a rabbit out of the hat. So I would be very attuned to the possibility of all these markets going higher if that happens. And the dollar, you know, who knows? The fact that the Brits are getting a little bit of cooperation from Europe as far as coming, you know, some kind of an exit deal. I think an exit deal would help the pound a good bit. And then actually, maybe we should look at the pound, because we talked about that when the other day when it was right at the lows.
Here we go. US dollar, British pound. Okay, that's on a daily.
That's the dollar. Can you visit pound dollar the other way around?
Okay. Now let's try that again. Here we go. 6B. Okay.
Yeah.
There we
so
go.
Actually, when you look at it the other way, it kind of looks like the dollar might be headed down.
It does.
So, you know, this is one to pay a lot of attention to, because I think you had a slightly higher bottom against the previous low, if you could check that.
Yep. Oh, you're talking about squeeze it up? Yeah.
Yeah.
Okay, last time we were down in this territory, 1.20. That was back in 2016, it looks like. 2017.
Right. So now, you know, look, if this thing suddenly got set free here and starts getting up to 125, boy, you know, you could have a monster rally in this pound.
Well, they say if it looks like a W, trade it like a W. So there's the makings. We got one more leg to put in.
If the pound leads the way higher, I mean, you just got to buy all the currencies or sell the dollar, because to short the dollar, because this thing is way overdue for a rally, and the pound is artificially depressed over this fear of Brexit, and I think that this is probably an instant where it's sort of anticipation of the Brexit, and when the Brexit actually happens, maybe the pound could rally very, very dramatically. So, and obviously these developments in the last few days are definitely pound positive. You can see it before your eyes. The pound has started to creep higher here. It's started to look like a serious, and we're going into the end of the week, so you got a weekly reversal in the pound, and it certainly looks encouraging. And look at the platinum today. The metals are literally a few points, a few cents, a few dollars away from an upside breakout here as well. So to be very attuned, because if we have a strong day in the metals tomorrow, I'd say that's definitely a go with type of day.
I agree.
And you never know, they might come out. What if the Jackson Hole comes out and says the dollar should be weaker or something, something like that. That could definitely help these markets. So, but as you suggested earlier, we are starting down a bit again here on these markets. So that's something to be careful of.
Let me take a look at that real quick. ES. Yep. See, we found resistance where we had anticipated at a weekly trading zone. When price approaches the zone from below, we expect it to be good resistance till it isn't, like it was here, and here. And when price approaches from above, we expect it to be good support, as it was here. And the most likely thing to happen when price gets to a zone is this: consolidation, 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 and this is rejection. Price touch, like think of a stove. You reach over, you touch the stove, it's hot, you snatch your hand back. That's not a huge wick. Sometimes we'll see a really exaggerated wick on a rejection, but that still qualifies as a rejection. And when this zone rejects price, well, there's only one other place for price to go. Doesn't mean it's going to get there, but the mission at hand becomes so obvious and apparent. If this zone rejects it, where's it going to go? Price is always trying to get to a weekly trading zone. Around the clock, there's never a time you'll open your charts that price is not on a mission to find a weekly trading zone, either the one overhead or the one below. And as I teach you to discern which one it's hunting for, which one it's gunning for, that's when you'll see, hopefully, things turn around for you.
That's actually a good thing to keep in mind, because it's sort of what's the word? From a mindset standpoint, it takes you away from looking at the chart more to looking at the price.
Yes.
Because a lot of the times the chart can thwart you, and if it gives you perspective that, if we're coming off one weekly low and it looks like we're going to head up to the other one, you should try and position yourself for that trade and stay with the trade till it gets there, and then reassess depending on whether it's going to go through that trading situation or the next trading zone or not. So
we teach three things. We teach three things can happen. The most likely is consolidation. Second most likely is rejection. The third is what I call the slice. You see here how this 30-minute candle sliced through the zone like it wasn't even there. So what we expect to happen is after the slice, we expect price to then retrace back to the zone it sliced through. And in this case, confirm it is going to be good resistance because it wasn't as support. Looks confirmed. So now we just expect a continuation. We anticipate a continuation in the direction of the slice.
Right, and it's still, as I said a few times over the last few days, getting for the market to remember the beginning of the 800, what ended with the 800 point down day. started out from a high where the market, fell apart. And remember, we had a situation just kind of like today, where the Nasdaq is going to a steeper discount to the Dow. The Dow is up 71, kind of the last man standing, and the Nasdaq's down. That's never a good thing. And we had a little bit of that right at the top, which wasn't as defined as October the 2nd last year, but it was, what's happened to the market since. It was a kind of a clone of what happened to October 2nd last year, where the Nasdaq started breaking down. And remember, you had some very pronounced divergences. You had, I forget, Amazon broke sharply on news on their earnings. Google opened higher, but it couldn't make a new high. So there was a lot of kind of failure swing type situations developing. And so listen, great show, but thank you very much.
Thank you very much, John.
Wish everybody a great afternoon and good luck with the markets. Thanks.
All right. Thank you. You too.
Bye-bye.
Bye-bye now.
Bye.
All right. The logical swing trader just spoke as John was speaking. The logical swing trader spoke. There is a fresh for those of you who are already a part of the logical swing trader. And of course, if you are a passport holder, before the logical swing trader was released out of beta, as you know, you're already included, because when you became a passport holder, you were told everything CFRN is now yours, full access pass. So here comes a new product. The product monthly is $197, and annually I think it's $14.97. So it's a pretty significant savings. At monthly, 12 months takes you up like 22. Alexa, what's 197 times 12?
197 times 12 is 2,364.
Okay, so if you pay monthly, it's 2,364 for the year. If you pay annually, you'll save almost $1,000. It's $1,400. Anyway, you're hearing this first right here because you're in the audience. This isn't one of those phony baloney things where, this is a digital product, right? Okay. I'm not going to run out of subscriptions, right? But I am going to cap it, all right? The first 100. Hey, I took one of those marketing seminars on the webinar on a Saturday afternoon. I know that I got to have a call to action, and then I got to, I got to make it scarcity, right? Here's my scarcity. First 100 traders qualify. Ha. Hey, I'm no Ty Lopez, but you know what? I try. I know I'm no better. Most of these guys out there run circles around me, except in one area. I work harder, all right? Me and Michael both, and Valerie. We're the hardest working people in Emini Futures. May not be the fastest, the tallest. I'll speak for myself when I say the prettiest, because anyway, I'm not. So, just saying. Now, I do have a luxurious mane, but it's mainly turning gray. So the first 100 traders will qualify for this. I'm not saying I'll never do it again. I'm not going to paint myself in that corner, okay? But I am promising that the first 100 people who respond to this offer, okay? I'm sure I'll have an offer of a different color someday. Logical Swing Trader just spoke. Check the channel. Your first 30 days are free. So I'm saying check the channel to those who are already a part of it. And those of you that want to be a part of it, you can check the channel in about 5 minutes, okay? There's actually, I think, 4 untriggered alerts sitting out there. I'd have to count, plus the one I just put there. Now, how confident are we? How confident are we you will find the Logical Swing Trader a tool you don't want to trade without? Here's how confident we are. We're giving you 30 days to earn the money to pay for your subscription. What? You are not. No, I am. Really, we are. Kind of a big deal. Next time somebody tries to sell you a trading tool out there, I ask them. Okay. Now, I'm not going to do it with the passport, so I'm kind of funning here, tongue in cheek. But the next time somebody's trying to hard close you on something, let's go, well, hey, how about you let me use it and trade with it for 30 days, and then, you know, if I make even just enough money to pay for my subscription, I'll be a customer. I hope they don't hang up on you, and hopefully they cover their mouthpiece when they're laughing. But I'm just teasing, good-natured fun. You know, different people do different things. I'm not here to judge anybody. When it comes time to stand before God, at the end of this life, I'm going to stand there alone. As much as my wife loves me and my children love me and I love them, and you know, we come into this world naked and alone. That's how we're going out. So the only thing that you can, I've never seen a U-Haul following a hearse. There is one thing, only one thing, that you take with you when you leave this place, and that's who you were. Think about it. Who you were. Does that in any way influence or change what you might have been planning to do with the rest of your day? I don't know. I just know when he comes back, I want him to catch me being about my Father's business. Now, such a great example was set for me by my grandmother. She's 95 now. But when I was a kid, you know, the big thing for me was get to go over to Granny and Granddaddy Reeves' house for the weekend. Boy, I would be so excited in school on Friday, I just couldn't sit still. That bell rang, man, I knew Grandma would be there to pick me up, go to her house, probably have a snack of like Cheetos and orange juice. Now, that might not sound good to you, but to a seriously overweight child, oh, it was heaven, yeah. And then it was just, the weekend was just a blur. There was country fried ham and red-eye gravy and biscuits and banana pudding, and oh man, the list just went on and on and on. When my grandfather retired from being the sheriff of the little town that Opie grew up in, yeah, I was the Opie of Thompson, Georgia, McDuffie County. When he retired from being the sheriff, he still had some years in him and he wanted to stay busy. So he bought the Frito-Lay distributorship for our area. The town I grew up in had a population of about 8,000 back then. And all these years later, it's still about 8,000, I think. But he had the city and the surrounding areas, which means he got to go to all the grocery stores, the Piggly Wiggly, the Winn-Dixie, the Milo, and stock the shelves with the potato chips and the candy bars and all that stuff. So I grew up, after the sheriffing days, I grew up with a candy warehouse in my backyard. They actually constructed this little block building. We had lax zoning laws, to say the least, I guess, back there. And so, but it was a very nice block built, professionally done little warehouse, chock full of every kind of potato chip and candy bar and bubble gum and trading card that you could ever imagine. Now, what's really amazing, even though I was chubby, 12 years old, I topped out at 159. I didn't really crave candy. I was never a candy kid and it's probably because it was always around. You know, most houses you go to, you look on the kitchen counter, there's a loaf of bread. Well, on her kitchen counter, it might be one of those big boxes of Almond Joy or Mounds, Peter Paul. Sometimes you feel like a nut, hey, sometimes you don't. Anyway, that's how I fell into the Cheeto and orange juice habit. He didn't sell orange juice, but boy, did he sell Cheetos. So anyway, enough of that. I'm not even sure how I got there. But let's back to what's important. If I was talking about something important, if I fell down that rabbit hole, and you're like hanging on the edge of your seat for me to finish the original thought, tell me. I'll be happy to. I bet you can't remember either. So how confident are you that you'll find the logical swing trader tool you don't want to trade without? Oh, I was telling you, ask the next person that wants to say something if you can just use it for 30 days and earn enough money, and then you promise, pinky swear, that you'll buy their service. And of course, most businesses are not set up and designed to do that. Now, I don't want you to think that I'm trying to insult you by telling you there's only 100 seats available. Well, it's virtual. Now, actually, the go-to meeting room that I meet with you guys for the mentoring sessions, that only holds a maximum of, I think, like 20 people. So if I'm holding something there and if I see seating is limited, it really is. There really is only that. And some of you have come, and on days like when we have an open house, you get the little sign that says, sorry, the room's full, check back later. Then as soon as somebody leaves, another person can come in. But anyway, I'm not going to insult you and say there's only 100 seats available because it's a digital product. It's me. I'm basically the product, I guess. But the first 100 people that respond to this will get this deal. Okay, if you're number 101, you probably get some different deal. Okay, that's all. We're going to give you 30 days to earn the money to pay for your subscription. Now, hey Valerie, are you there? Take that as a hard no. I guess I'll have to go find it myself. Hang on. I got this. And they just go off and abandon me. Okay. Good people. Salt of the earth. I know I got it right here somewhere. I'm going to give you the links. That's what I'm trying to do. Before they get... And I'm going to give you guys plenty of time before I... if there's whatever's left, I'm going to... Up to the 100, I'm going to put it out. And I'll do the Twitter and the Facebook thing. I learned that at my marketing seminar too. Oh, while I'm scrolling looking for stuff, let me copy this and paste this into the chat box. One of our traders, David, is very faithful. He has the the prayer room open every day. I just put the link in the chat box. I'll put it in this other little box too, because I think you can actually click on stuff there. But this is a conference call. We don't talk about trading. We don't talk about business. It's just a virtual prayer room conference call from anywhere. You can dial in. If you're walking in the park with your dog, at your desk, still laying in bed because you stayed up late and traded the London Open, whatever. It's just a group of men and women coming together with a common belief, giving proper priority to their day. Today's Thursday. I think I'm going to put Jesus first. You get in that habit, whoa, it's powerful. It really is. So I encourage you. Now, you're not going to be put on the spot. You don't have to say anything. You can sit there in silence if you want. The little recording, when you log in, the little voice, and again, you don't need a computer. You're just dialing in. The little voice says, as you enter the discussion, please say your name. You can or not. You could even use an alias. We wouldn't know the difference. If you have a prayer request, cool. If you have a praise report, cool. If you want to be prayed for, cool. If you want to pray for somebody, maybe God's put some little message, not some little, but a message on your heart that you want to share. You don't really have anybody to share it with, or you need somebody to practice on. Come on down. 9 a.m. Eastern, Monday through Friday. And it lasts, as long as it lasts, it's always over before the Wall Street Open. And there was a time when I was able to be there every day, and Frank was there every day. There was a bunch of us. We had some good crowds. Even my mom, who lived in Georgia, she's not with us now, but she used to even dial in some days. So it's pretty cool. And because it's not about business or trading, it's just about the things of God, you know, not only can you come, but you can invite your friends, you know, people that you know that might want to have some place just to kind of ground themselves before the day starts, before the world hits you right smack between the eyes. You can gird up, put on the breastplates and, you know, all that stuff, right? To get your shield. You know, I'm not joking. It really can. It can take what started out as maybe a rough day, you know, where you stubbed your toe, you got the flat tire, blah blah. It can turn that thing around. So, anyway, now back to the link I was originally looking for. Maybe if I type in swing trader link, it'll come up. Hey Val, are you there? I think I just found it. That's not the one. Oh, I know where I have that. Stand by. Okay. Still checking. All right. My page. Oh, there it finally came to life. Okay. All right. So first, I'm going to give you the monthly link. Okay. I got to maneuver over here so I can copy it. Yeah, there we go. Okay. All right. So this first link is monthly swing trader. Okay. Now I'll grab the annual link. Oh, you know, I should put it in the other place too. Okay, so there's annual. The one I just posted was monthly. Okay, so now I'm going to post the annual. Now remember, with the annual, you save almost $1,000. But it's up to you, whatever works best for you. Okay. And one more spot. Okay, and so the links themselves are clearly labeled Swing Trader Monthly, Swing Trader Annual. Okay. All right. So no matter which one you go with, I'm going to give you 30 days. Put it to work. Now, I'm going to say this because I should say this because it's important. Always trade anything you try out in sim until you prove yourself consistently profitable. Our method, anybody's method, indicators, oscillators, if you're changing one jot or tittle of anything that you're doing, if you've been doing something that has been bringing you consistent profitability, you need to think real hard about changing anything, okay? Doesn't take much to upset the apple cart. What is that thing about a butterfly's wings in Brazil or something? Caused an earthquake in California. Anyway, just be careful. So when you embrace some new concept, idea, principle, okay, nothing wrong with that. Just make sure you do it in sim so you don't lose all your money. Yesterday, I had put a post on Facebook about the trial. And some guy goes, he made a post. He goes, yeah, I took the trial, I lost everything. Whoa. Yeah, that was a bit of a shocker to hear something like that. And I said, well, that's why the instructions say, you know, to trade this or anything else in sim until you are 100% consistently profitable and confident in what it is that you're doing. And his response, I thought he might have been trying to be maybe a little mean-spirited towards me, but it wasn't that at all. His reply, see, that's how easy it is to misread people on the internet. I guess that's why they invented the little emoticons. He goes, well, I'm not giving up. He goes, I've traded before and I thought I had it down, but turns out I guess I didn't. But I'm not giving up. I'm gonna keep trying. And so I complimented and commended him on that, on having that can-do spirit. And next time, and I invited him to finish up the trial. So he might even be here with us today. I don't know. But I encouraged him to spend the rest of the week with us on the trial and, watch. And by all means, feel free to trade, but do it in sim so that there's no chance of losing anything. And I can't say that enough, guys. Whatever you try out there, if it's real today, it'll be real tomorrow. So you don't have to rush into it. Throwing money at the market will not make you profitable. I know I talked about that yesterday. I won't go into it again so much today. But when I couldn't be profitable in sim, well, I mean, it's obvious, right? It's because there's no real money involved. If you put real money on the line, you have to be profitable because you can't afford to lose any money. Oh, okay, well, that makes perfect sense. Here you go, down to the bank, send another wire. Remember when you had to go to the bank to send a wire? Now you can just log in from your desktop and do it. Yeah, those were the days, my friend. All right, so anyway, I have enough confidence in the alerts that I send you, both in Logic 247 and in, before you ask, I'm not going to do it with the passport. I'm just not. End of story. We don't even have to discuss it anymore. The swing trader, I'm going to bend a little. Because see, there's a whole host of reasons why this type of thing most people don't do. I typically don't do. And it really has nothing to do with being cheap. And in my case, I can't speak for others, it doesn't have anything to do with not believing in my product. I believe in it wholeheartedly. Stand by it. Everything we do is done in front of the whole world. The whole world's watching when we do everything that we do. And however it turns out, we got to live with the results because we publish them. Okay? So I won't get into all the reasons behind why people do or don't do what they could do or should do or don't do. I'll just tell you, I really do think, could we spin through a few? I think, hang tight, let me find my channel. We got a channel for everything, pretty much. Now you're the first folks that have ever been given access to that link with that trial built in. Let me find that which I seek. Must be here somewhere. Go check in. Did I find it? Did I find it? No. Well, Valerie, I could have swore we made a channel for this. Oh, you called it logical, didn't you? Mm-hmm. There we go. Very good. Nice job. Okay, so let me just walk through the channel real quick. Got to read this, terms of service. You must read this and understand. This, oh, by the way, you will have to sign an NDA, a non-disclosure agreement. It's digital. I'll send it to you via email. You'll sign it. You'll send it back. It will be placed in your file, on your permanent record, okay? I'm real serious about this. But here's the thing. It's such not a problem with you guys, because we all answer to a higher authority. And I've spoken to most of you in private in mentoring sessions, and only God can truly know a man's heart, but I got a pretty good idea. It's kind of like knowing, what the next high probability move is. I don't know for sure, but I'm pretty close sometimes. And when I meet people and talk with them, I get a pretty good read, as I'm sure you do too. And you folks are just the salt of the earth. That's kind of what makes coming to work every day such a pleasure. Yeah, that and the money. No, really. You're nice people to work with, to be around. So, legal says I got to put this there. So, it's there. And they will go after you, however they do that, if you don't do the right thing. But I told them, my people always do the right thing. And they just laugh. You know how attorneys are. They don't have a lot of trust in mankind. Okay, so read through this. Okay. And then email or call with any questions. Yeah? Okay. Trading is risky. You can lose all of your money and then some. Check with a licensed investment professional before making any investment decision. This is not your father's swing trade. What does that mean? Well, typical swing trade says, okay, we think price is going to go from A to B. Period. Okay. We think price is going to go from A to somewhere in between A and B, maybe a few times, and then it may or may not go to B. What? You call that a swing trade? Well, like I said, it's not your father's swing trader. The principle is a little bit different. Mark Douglas taught that as a trader, you need to learn to pay yourself as opportunity presents. As the market makes money available, maybe you should, take a little off the top, right? Let's say you're in a trade and you've identified a 10-point target. And man, you've bought into that thing, hook, line, and sinker. And it goes up 7 points, 8 points. Man, you're feeling so clever. With each tick, that smile just gets a little broader, right? Ooh, baby, we're at 9 points. 9 1/4, 9 1/2, 9 3/4. Hey, honey, come watch this. Come watch this. Sucker drops like a rock. About that time, the wife, makes it into the office. What, honey? Don't throw stuff at her. She loves you. She washes your underwear. Don't do that. Be a gentleman. Got to handle this stuff with grace, okay? Now, does that really happen? Yeah, it really does. She doesn't wash my underwear. No, she does, but that's beside the point. Hear me out. Mark teaches, oh, and if you don't have Trading in the Zone, which is, there's two trading books that I regularly recommend. No, there's actually 3. There's Read the Greed, Take the Money by my good friend Mike Reed, who I pray is going to be on the show tomorrow. His book, Read the Greed, Take the Money. His last name is Reed, R-E-E-D, and so Reed, R-E-A-D. You see what he did, right? Yeah, it's clever, right? Okay, I recommend his book. I also recommend High Profit Candlestick Patterns by Steve Bigelow. I read that book until the pages fell out. He sent me a new copy. I sent him a picture of these pages. It's all over my desk. I used to take my son to swimming lessons every day a few summers back, quite a few. And I would sit in the sun. They had no shade at this place. And I guess the glue, the binding, whatever, it gave away. And so when I showed that to Steve, he gave me a new book. But I recommend that one, High Profit Candlestick Signals by Steve Bigelow. And then the one that I not only recommend, I stand on. It's kind of my platform. I live and breathe and trade from the information that I discovered in that book. So, we have an agreement with our sponsor, Audible. If you decide to become a logical swing trader, I'm going to make sure that you get a legal, authorized audio book of Trading in the Zone by Mark Douglas. Now, I resisted reading the book for a number of years because I found out, I almost bought it, but then I found out it had no charts, had no indicators, had no settings of any kind, no setups. I'm like, that's about worthless. I needed something that would make me money tomorrow morning, right? Well, it's not that kind of book. Mark wasn't that kind of guy. But out of desperation, one Saturday, I called around Phoenix. I found a copy at a bookstore, Barnes & Noble, across town. I asked the guy if he would hold it for. He says, I only got one copy. I said, oh, will you hold it at the register for me? I'm going to drive across town right now and get it. I was that desperate. And he said, oh, it'll be here. I'm like, well, I'm asking, would you please hold it for me? He goes, it hasn't moved from that shelf in 5 years. I was like, see, that's your hidden gem, right? Everyone's overlooking it for all the other flashy stuff. I said, will you just hold the book for me? He goes, yeah, I'll hold it. So I went, I got it, I came home, pregnant with anticipation. I sat in my lazy boy. I think I went up to Tinkle a couple of times. I read that thing cover to cover. It spoke to me, and when I closed the book, when I was done, it made a sound like this. That was me closing the book. I purposed in my heart right then and there, I was going to meet the man who wrote this book, because I knew it was a Saturday, so I had to still wait through Sunday. I had to grind through Sunday to get to the markets so I could start putting into practice the things that I had learned. I was that excited. I knew that what I had read was great truth. It just resonated with my spirit, and I purposed in my heart. I said, I'm going to meet that guy. And it took a little doing, a few phone calls, the here, there's, and the whatnots. But fast forward a couple months, I'm sitting across the table from Mark Douglas, having a great lunch, having a great conversation. He was one of the good guys. I miss him, and I'm so sorry to see him go, but apparently God needed him more than we did. He fulfilled his mission here. I don't know where God's sending him next, but we miss you, Mark. Anyway, I'm going to give you a legal copy of that audiobook based on our relationship with Audible. So, when you check out, be sure to mention it to Mallory. I want my free copy. She'll tell you how to get it. Okay? All right. And again, the reason I even brought up Mark was Mark taught you must learn to pay yourself as the market makes money available. Okay. All right, so we had a short trade on the S&P. Now we did, I think it was 3 weeks of beta. So you can look at the beta results if you want. Valerie will hook you up. Number one, ST alert number one, swing trade, swing trader. Short the ES at 28.65, down to 60, down to 40. It's a 25-point move. Thumbs up, just like with the logic channel, the 247 channel. Thumbs up means we found a price target. On this one, we reached the final target 3 times. In fact, I think I still have that chart handy. Right here. Yeah. Okay, the chart you're just looking at, the trade, the alert, right there. Okay, that's this. 28.65 down to 28.40. Back up to 28.65. Back down to 28.40. Back up, back down. We believe, part of our core philosophy, important prices, important areas are almost always tested. And that's what that means. Boom, boom, boom. So instead of just having, if it had just been a 25-point trade in the S&P 500 Emini Futures, anyone would call that a great swing trade. 25 points? Yeah. What does that work out to be? $1,250 per contract traded. Times 3. Oh, what happened to my 3? There it is. Times 3. $1,200. $1,200. Now you could get real clever, right, if you wanted to, and you could have traded at 12 down, 12 back up, 12 down, 12 back up. But that wasn't the alert. Okay, that's a little too clever for what we put out publicly. I understand a counter trend trade. And I have no problem with it. It's just I know it doesn't offer you the same high probability that a trend trade does. Okay. So every time you hear me say important prices, important areas are almost always tested, think about this picture right here, this image. Does it always trigger 3 times? No. Does it sometimes trigger more? Yeah. Sometimes less? Yeah. Does it sometimes only trigger once? Yep. Don't wake up expecting this to happen, but recognize it when it does happen so that you can take advantage of it. Now, for the trader who has earned the right to trade 10 contracts, that's a $12,500 move down from the published entry to the published target. Another 12 grand and another. And this all transpired between 11 a.m. Eastern on August 14th, and it finished up August 15th at 9:30 a.m. Eastern. Okay. All right. So I'm not going to walk through every single one. I'm just gonna you, because you can look at them yourself. See, I don't need a photoshopped or airbrushed chart to make my point. You can just take the numbers, go look at your chart, right? This way you know that joker on the internet was telling you the truth. Okay. Remember, facts change, but truth never does. Okay, the next one, the Dow, that thing got stopped out, I think, by like 1 tick or some nonsense. I will take the time to show you that one. Okay, Dow. Now, what day was that? It was August the 12th at 3 p.m. That's what time it was issued. Okay. Let me show you. 3 p.m. Eastern. Okay, it was issued at 3 p.m. Eastern on the 12th. Now let's see when it triggered. The trigger point was 25760. 25760. That's going to be over 25760. Where's the swing low here? 25750. Okay, so the trigger was 60. 25760. Pull that down to the bottom. Come on. There you go. That swing low right there. Come on. Why is it doing that? So 25750. So by just that much, just a little bitty tiny tail, little wick right there. But hey, deal's a deal, right? And well, that's the truth about trading. You will get stopped out. Now, having said that, let's go back to this. All right. So that was number 1. Number 2. So number 1 ran the race 3 times. Number 2 stopped out. Number 3, shorting the NQ at 75.10. Okay, we only reached the second target here. Okay, again, we have an entry, we have a target, multiple targets, final target, whatever the case may be. The logical swing trader is not always about going to the final target. Well, yeah, we'd like to, sure, but we recognize that we might not. And we also recognize that we may revisit the entry more than once. Okay. All right, number 4 was a short on the Russell from 1483 down to 1456. The first target, which equated to $500 per contract traded, that was reached. The final target, which was 1460, that was also reached, and that worked out to be $1,150 per contract traded. Number 5, this alert was issued Thursday, August 15th, 3:15 a.m. And reached the third target, triggered 4 times, 294 points times $5 per point equals $1,470 per contract traded. That's a $14,000 move for someone who's earned the right to trade 10 contracts. Can't stress enough, please don't trade contracts that you've not earned the right to trade, because if you do, you will lose your money. I'm not going to put lipstick on this thing. I'm just going to tell you the truth. If you trade live money, real money, before you earn the right, you will lose that money. Don't do it. But I'm desperate. Okay. I recognize desperation. I smelled like it for half my life. But please don't. It's only going to put you in a deeper hole, further behind the 8 ball. And you're going to need an even bigger miracle, right? Start doing the things that are going to help you, not put you deeper in trouble. All right. You know, begging you not to do it, that's about as far as I can go. I'm not going to threaten you, so I'm done begging. Just please don't. Okay, number 6, short on crude, just never triggered. That's what the Z's mean. I did have a red X up here, did I not? Yes, I just want to make sure. Okay. That's the Dow again. Number 5. And number 6, crude. That one, no trigger. Number 7, 28.92. 28.92 on the S&P. We have not triggered yet. There's 28.92 right there. Okay. And then, oh, that's right. I'm not going to give these away. No, stop me. No, seriously. You know, in all fairness to everyone involved, because, hey, did I mention that we're literally willing to buy you a subscription to the Logical Swing Trader, because you're going to get to use it in all its force and fury for 30 days, so that you can first trade in sim till you kind of understand what you're doing. And you have a mentoring session with me so I can impart a few things to you. And I'm going to ask you straight up, you know, if you're getting ready to go live, I'm just going to say, okay, now you're getting ready to go live, you're going to trade one contract. Are you prepared to lose that money? Well, I don't want to lose my money. I didn't say you were going to. But this is trading, and that's the truth about trading. So, yes or no. And if the answer is not yes, then you and I got to part company. Okay? I don't want that on my conscience. I like to sleep at night. So, I mean, we'll have a conversation. I mean, I'm not just going to like hang up on you all rude, you know, ugly. No, I'll talk to you about it. But there's so many shattered dreams and broken lives on the road to Wall Street. I don't want you to be another casualty. Anybody can be the 9 out of 10. My heart is for you to be the 1 out of 10. Together, we have a high probability opportunity in front of us. So, copy the link I've placed here. If you're in YouTube and you can't copy the link, go to or just email support@cfrn.net or call Miss Valerie, 949-42-EMINI, 949-423-6464. It should set you right up. Okay. All right. Okay. So I think we covered everything, right? Maybe we didn't talk about crude. Crude triggered, 55.80, Concierge Trade Alert. Dropped down to $350 per contract available. Weekly trading zone, we expect it to be good support until it isn't. It then sends price back up to 56.35, weekly trading zone, which we expect to be good resistance till it isn't. Okay, so it was, and this is what it looks like when it wasn't. See? We sliced through the zone like it wasn't even there. So now what? Okay, when that leg that sliced through, obviously it's got momentum behind it. When it runs out of steam, we're looking for it to retrace to the zone it sliced through, and then ultimately we're looking for a continuation in the direction of the slice, which would be this. And the zone below, since today is Thursday, the zone below is 54.90. I know, yeah, right. Oh, you're just making that up now. No, seriously, I'm not. You can go into the channel. It's open to the public this week, the discussion group. We post all that stuff in there. When you're on the trial, you get the full treatment. We don't hold anything back except the partners workshop on Thursday night. That's our private behind closed door time that we can really open up and talk about what's going on in our life, in our trading, whatever. It's an open floor, open discussion. So that's our private time, and it's something that you'll have access to and be a part of should you decide that what we do is right for you. Okay, I guess that's it. We covered the S&P. Okay, we're consolidating at a zone, as we would anticipate. Now, remember I talked about the slice here on the S&P? Retrace to the zone, confirm that it is going to be good resistance. When we approach from below, we always anticipate good resistance. And hang on one second, and I got to check. Gee, Valerie, you having fun with all those red X's out there? I'm just teasing. We did have a flurry there. That's okay. It's the truth about trading. Now I'm not like the guy on TV, that one liberal comedian who goes, "Oh yeah, I hope we get a recession. That'll fix Trump." I don't want to see red X's, or I don't want to see trade stopped out, just so I can prove to you it's real. But it does add a certain element of something, because it's like, oh, okay, well, this streak is now believable because of this red X streak. Puts each other in perspective. All right, so the next alert will be number 2,538. I'll make this really quick. We're going to the good word for the day. That's the only thing left on deck that I'm aware of. Unless you have a question. If you have a question, put it in the chat box. I'll be happy to answer it.
New visitor.
All right, that's the S&P. How now, Mr. Dow? Huh. Do I want to do that? Down the S&P, dancing to a beat of a different drummer today. Unusual. It certainly is. Yeah, I don't think I want to get in front of that right now. That, no. I might take a bite out of that. Okay, hang on. One last one, and then we'll go to the good word for the day. Class dismissed after that. Okay, all right, all done. Thank you for your patience. Good word for the day. We've been talking here last week about problem solving. How do we as believers recognize problems, and we learned that, that's really the first thing, recognizing and admitting that you have a problem. If you've ever known anyone in recovery or who went to meetings and that kind of thing to deal with addictions, you probably heard them use that kind of language. Now, actually, yesterday we moved into success. So we saw our problems, we defined our problems, we talked about how to fix our problems, and we talked about success on God's terms. And let us turn today and talk about rejection. Now, yes, rejection is this on a chart. It's a little bit different in the real world, and it can be painful. Whether you're, an 8th grader and you get rejected by a girl or by a football team or whatever, or 80, it can hurt. Hebrews 11:34, whose weakness was turned to strength. Hebrews 11:34. Quenched the fury of the flames and escaped the edge of the sword, whose weakness was turned to strength, and who became powerful in battle and routed foreign armies. Always try to be open to constructive criticism, but don't personalize it. That's the key right there. Don't allow your opinion of yourself to be colored by the opinion of those who fail to see your best qualities and your potential. Successful people all have one thing in common. They had to overcome rejection. In 1902, an aspiring young writer received a rejection letter from the poetry editor of the Atlantic Monthly. Enclosed with a sheaf of poems the 28-year-old poet had sent them was this curt note: "Our magazine has no room for your vigorous verse." Yet he became one of the most beloved and popular American poets of all time. Who was he? Robert Frost. In 1907, University of Bern turned down a PhD dissertation from a young physics student. That student went on to change the scientific world forever. His name was not Sheldon or Leonard. It was Albert Einstein. When a 16-year-old student got his report card from his rhetoric teacher in school, there was a note attached that read, "A conspicuous lack of success." Guess who that was? Winston Churchill. After listing the heroes of faith in Hebrews 11:34, we read this: whose weakness was turned to strength, and who became powerful in battle. Friend, I'm here to tell you that can be your story too. David, who experienced spectacular failure in life. I mean, there's a fail meme if I've ever seen one. He wrote in Psalm 28:7, "The Lord is my strength and my shield. My heart trusts in him, and I am helped." The only people who can let you down are the people you lean on. So do this. Try leaning a little less on people and a little more on God, because he will not let you down. That is our good word for the day. I think I mentioned Partner Workshop tonight, 9 p.m. Eastern. You do need to be a partner or a passport holder to get behind the closed doors. If you want to become a partner, if you've been on the trial this week and you're ready to hitch your cart to our convoy, we welcome you with open arms. Go to, do this. Call Valerie, because there's some paperwork to do. Best we get it done early in the afternoon so that your invitation comes out without a hitch. Okay? So call her 949-423-6464. If she doesn't pick up, and she's probably on the other line, do leave a message. She'll call you right back. You can also email support@cfrn.net. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.